Ah, okay. Welcome, welcome. You're in for a treat. We're gonna have an amazing time tonight. Today for most of you guys was probably eventful for a couple different reasons. So I'm gonna let people get in the room. I had to flip from Facebook to YouTube because Facebook has some parameters on their streaming that I don't like. Kind of erodes the quality a bit. So think I got 6 people on, more people to join. I ain't worried about the numbers. These videos will exist forever. So you'll be able to come back, you'll be able to share. I got a action-packed night for you. And I know you probably have been inundated today with posts, with messages. Everybody that is alive probably knows that today was a pretty unique day in the stock market. So let me do a couple quick checks to make sure I'm flowing. It's my first time going live directly through YouTube. So give me a little bit of grace. I have to work out some technical issues. The chat, if you can let me know where you're from, where you at. I'm here in Atlanta. I actually just drove back from Nashville. I was in Nashville earlier. My family had like a little just a little fun weekend in Opryland, which I've never been to. Yeah, Opryland. Uh the funny thing about Opryland, it's like it's I guess my cousin told me it's like the largest indoor resort in the country. Huge, all these water slides, restaurants everywhere. It was pretty nice, really nice. So um I actually start my story there. So it's 6 o'clock in the morning this morning. My cousin knocks on the door. Right, we got to leave. We're checking out at 11. He knocks on the door and he's like, "Hey, the market. I was just up. Do you know the market is crashing right now?" I was like, "What?" I said, "Man, you tripping." I know we're in bear season, which I'll explain in a minute, but so I'm on my phone. I go straight to the ES. I want y'all to think like a trader for a second. Somebody says the market is crashing. I go straight to the futures market, the S&P specifically. Why? Because futures is a global market. Japan opens at 6 p.m. our time. The European markets open at 3 a.m. You can trade at 3 a.m. I used to do that at long time ago. Don't do it now. And then our market opens at 9:30. So it's not 24/7. It's like 22, 23 hours a day, 5 days a week. So if you really want to see what exactly what the market is doing at 6 in the morning, when our market isn't open, you look at what Europe is doing. Right? That's point one. Um, so I got a group called Insider Trading. It's actually created by me and my cousin Joel Harrison. Shout out to all my insiders. I see some of you guys in the room. L Light says peace. What's up? Father Legends is out in Arlington, Texas. That's what's up. Monique, what's up, Monique? Out in Charlotte. Yvette in Hampton. Who is this? A doctor and a diva. A doctor and a diva. I like it. Out in Atlanta. JQ is out in Charleston, South Carolina. Thanks for joining me. Um, so yeah, so I got a group. We have a group we started 10 years ago. It's on Facebook called Insider Trading. I put up a couple of posts and then everybody starts talking, right? People are getting ready for this day. Because the first thing that I found out was Japan's market. Japan had a pretty tough day. Pretty tough day. Actually, let me check something real quick while I'm doing that. Maybe I should put this here. So y'all are gonna for 2 seconds. I gotta check something. Let me see if this will come up the way I want it to. Oh, it's not coming up. That is terrible. Because if this doesn't come up, I can't show you guys my charts. And that'll be pretty problematic. It's hard for me to teach without. Oh, let me try this real quick. Maybe this will work. Maybe this ain't it either. Okay. Nope. Shoot. How do you go live in YouTube and check all this stuff out before you go live? There should be like a private live version. Okay. Just give me 1 second here. I really don't want to go through Ecamm. Shoot. Okay, I know y'all have all those things on the screen that should not be on the screen, but I am trying to figure this out That's not it either. Okay, so this is not ideal. It's definitely not ideal. Um, oh, yeah. Now I'm kind of messing this up. Mm, mm. Give me a second. I told you guys, for those of you who just joined, this is my first time live on YouTube. This technology has changed so fast. Just 6 months ago, everything I used to do here was different. I had my flow down. I could run through all this stuff very easily. Facebook was giving me some issues. I had to flip it over to YouTube. I've never done YouTube. I wanted to deliver on doing this live, but clearly tomorrow I'm gonna spend a lot of time making sure I know exactly how to use the service I use. So I apologize for that, but give me just 1 second. I think I can. Okay, as long as y'all can see the chart. Oh, and that's terrible. Damn. Yeah, this is gonna be tough. This is going to be tough. I just got to think it through. This is like trading. Platforms today were not working. Thinkorswim, Schwab, Fidelity. What do you do when technology is not working? You be patient, catch your emotions, don't panic, figure it out. So let me think this through real quick. It's recording there. Let me get rid of that. Let me try this one more time. Oh, it does the little thing and puts me in the bottom corner. Yeah, that's not gonna work. Okay, this kind of sucks. I'm not gonna lie. And this is not me. Y'all know me. I try my best to give you quality at the highest level. That's why I got the 4K camera. Um, Pretty little lights in the back. Sheesh. But I do not know how to get my screen to do what I need it to do. Because showing you guys, trying to walk through this stuff without showing you, like, I know there's different like podcast shows that, you know, teach, entertain, this is a debate whether what people are actually doing. But I really enjoy teaching. I want to show you everything I'm talking about. I want to prove to you. I don't want you to take my word for anything. I want you to be skeptical. I want you to challenge me. What you can't challenge is the math and the data, which is essentially what charts are. They're just data, right? I didn't go through all those years of school and get my MBA to fall in love with stats and not be able to apply that to a chart to give me and you, my audience, a statistically higher chance of being able to actually precisely pinpoint exactly when you should get into the market, whether we're up or down, any asset class, any timeline, right? So that's what I do. There's a precision to this Noble Woods method, but if I can't show you, that's kind of that's tough. Let me try one other thing real quick. Try one other thing real quick. Let me go there. Let me stop. Let me pull up my phone real quick. I'll still walk through some things, even if I can't show you my charts. As you guys know, for those who do know me, I'll just record everything I was going to show you and then just post the video. So you'll still get it. Either way, you still will get what I was trying to show you, what I wanted to cover today. But let me check something on my phone really quick. Really, really quick. And let me see. Okay. Nope. Still not working. Let me see. Ah, no, it won't do it. I need an ecam expert. This is so annoying. Let me see. Is there any other way to do this? Um, Let me try one other thing, and if not, I will just stop trying. Mm. Oh, I guess I could go dirt. Okay, so I think I've figured out a roundabout way to make this happen. It's gonna be a little choppy because I think what I have to do is just go directly to the chart. You won't be able to see me; it'll just be the chart. You can still hear my voice. Oh, I'm in the bottom corner. Oh, okay. So that's how they do it. Okay. All right. Um, so we're good to go. Thank you for your patience. I'm learning. You're learning with me. The technical pieces, right? I know how to trade. This is not my, but I got to clearly update my skill set very quickly because I'm going to be doing this Monday, every Monday and Thursday for this month. I got some upcoming classes, so the schedule will change, but I promise you I'll be back to do a lot more lives. This month I wanted to give you a lot of context and content. So since I know how to do that, let me here. Okay. All right. Now we can talk. Now we can talk. Let me dive in. Uh my name is Noble, for one. I probably should have said that up front. Sheesh. I got like 55 things in my head. So my name is Noble. I've been trading since 2008. I got my MBA from Clark Atlanta. Went to work at Bank of America. Was making six figures. Next thing I know, this trading thing kind of happened. I met my cousin Joel, who's already doing his thing. Me and him went on this amazing journey. We were futures day trading partners for a number of years. I started off really successful. Long story short, I started in 2014. I wanted to teach. I realized how many people don't know what futures even are, let alone how to trade them, right? So it's been 30,000 hours for me. It's been 15 plus, 2008 to now. It's right. Been a lot of time, a lot of energy put into this. And so I think my approach hopefully will be a bit different from what you've seen. I like to challenge any and everything out. There's so much bad information, so many bad coaches and teaching and unethical practices in this space. Unfortunately, a lot of times it's unfortunately us preying on us, culture vulture type thing. So I want to give you some quality today. So let's do this. Let's just dive right in. It's bear season. Why do I say it's bear season? Because every year, August, September, October, I know a lot of people would try to pinpoint and say that September or October is the worst month of the year. I don't think you need to worry about specifically which month. Some years it's October, some years it's August, some years it's September. All right, so I just started affectionately because I love the market. I start calling this period bear season, bear season. Right. Um, I think we woke up, as you know, Japan's market crashed 12%. Let me do this. Let me actually pull up the Nikkei. Pull up Nikkei. Oh, there we go. Oh, want to pull up Nikkei future. So our S&P, which as you guys probably know, is like it's our broad market index that everybody knows. It's 502 of the world's best stocks. An index is essentially the all-star team. Instead of betting on one stock that maybe will make you rich 20, 30 years from now, maybe. Why don't you invest in an all-star team? It's all the best players every year. They cycle them out and pick the best ones every year for you, right? So that's all an index is. I want to go to though. I think it's backslash NK. Yeah. So I want to go real quick to the Nikkei, which is Nikkei 225, which is essentially it's Japan's version of the S&P. Instead of it being 502 companies, it's 225. As you can see, it's not letting me pull the data right now, which may just be because they got beat up so bad they halted trading. Okay. So I got okay, NK wouldn't come up, but NKD did. Let me make sure this is right. Yeah. Okay. I'll keep my candles for right now really simple. I want to start here again. My cousin this morning woke me up. My middle name is LeVar. He's like, VAR, the market is dropping this right. I went directly to futures. S&P. I looked at the ES, but here I just want to for a second. I want to go a little bit closer in. I'll go to like a 4-hour chart. And this is the Nikkei. All right, so just the last couple days. Let me see if that drop is correct. Get the percentages. Okay, so yeah, so check this out. This is crazy. Monday, Friday, Thursday. From Thursday's high, this little candle right here. This is on a 4-hour chart. From Thursday to the low, which was actually last night. Don't be surprised if we go back down and test that low. That was a 19% drop. Oh my God. That is crazy. To give you perspective, COVID, let's look how bad COVID was. If I go to the ES, the S&P, I want to put this on a month chart. I'll go real quick. I will go back to the month of COVID, which was right here, February. All right. From the high of that month to the low was 30%, but that's 30% over a month. Japan's market got hit really bad, 20% in just a couple days, which is crazy. These markets overlap. If you don't know, there's Japan's market, several markets, kind of, let's just say that side of the world, but specifically Japan opens at 6 o'clock, which rolls us into. Matter of fact, let me do it this way. I'll go back to the Nikkei for a second. NKD. Go back to the Nikkei, and if I jump to, let's go to hour charts, we can kind of see it a little better. So the shaded gray area is during the night. When the stock market, our stock market is closed, you can't really do anything. But the global market is still happening, right? So last night, if we're just looking from last night till today, what do you see? You see this really, really bad drop. It was at its worst at 1 in the morning, 1 a.m. This is when Europe was selling off. As Europe heard about what Japan did, sell off continued. All right. What happened today? This is the Nikkei today. You can see it kind of rebounded, right? So it recovered. How much did it recover? From those lows, we went back up 11, 12%. Right. When a country goes through that type of day, this was the worst day since 1987. Right. That's a crash. That's a correction. That's all those negative things you can think about and title it all in one. Right. So that's important to know. That's the base for where we kind of started today. Right. A lot of people, anybody who's, I'd say, serious about their investments, portfolio, wealth, trading, specific, definitely traders. You had to know what was going on today, which was Japan's market has some issues. I won't get into the why. I'll keep this one a bit more technical. 12% is the number for the day. 19% if we look back at like that last swing high, which was just from a couple of days ago, right? So 20% is crazy, crazy, crazy. 20% is crazy. It's huge. It's huge. The questions you're probably thinking about are: should I buy right now? What should I be buying? Should I be short? If this is as bad as you say it is, Noble, and then what's up with this VIX thing? I keep hearing about the VIX spiked up. All right. Um. Oh, I gotta do it that way. Let me stop that for a second. Okay, let me come back here. Again, for those of you guys who are new, just joining me, thanks for joining. I'm still working through the kinks. This won't be the smoothest. I promise you, this will be the last time it's a bit disjointed in this way. This is my first time recording, streaming live on YouTube. Clearly, I need some practice and to make sure I know exactly how to integrate things. So we're gonna keep rolling. I have like my notes, but I can't see my notes, right? So I'm at a little disadvantage. Okay. We talked about the brokerages. I know earlier this morning, a lot of you guys were trying to access your platform. You either trying to buy something or sell something. Maybe you wanted to play some puts on something. Maybe you wanted to exit a trade. Maybe you wanted to buy some Nvidia. In our room, there's 30,000 people inside of trading. My cousin Joel, shout out to Joel, put up a post and said, "What are you thinking about buying today? What are you buying today? Not thinking about. What are you buying today?" We got active, real traders and investors in our room. Best trading group on Facebook, hands down. Right? I'm biased, but it is. 50% of those people, to give you an idea of what other people are buying, 50% of those people said, "I'm buying Nvidia." Nvidia. So I'll take a quick look at Nvidia too. So unfortunately, yes, they do control the market. No, just because the market opens at 9:30 does not mean you'll be able to trade at 9:30. If they decide to halt trading, and there are rules around this, right? So even Japan's market dropping 19% from that swing high, 12% in a day, we won't even let our markets drop 12%. If it drops about 5, they're going to cut it off. The last time I saw the market drop that bad, and I'm so serious. If you could go back and find it, it was when Trump started to pull away in his first presidency. That election night, as he started, like as it became very clear and real that Donald Trump was going to be the president, the futures market started selling off so bad during the night that they literally stopped trading. They cut it off. And then we woke up the next morning to a new presidency. Well, he wasn't president, he wasn't inaugurated, but knowing we had a new president, and I think a lot of people were surprised at who the president was. Market rebounded, but it was already in an uptrend anyway, right? And so a lot of people didn't witness that crazy, crazy night of massive selling because it happened at night, and most of y'all aren't trading futures, right? So you wouldn't have known, but that was the last time I saw it happen, right? So let's do this. Let's think about this very logically in a very simple way. What can help us to know that the market is bad, is coming down, that things are dropping, that people are panicking? And you got to realize, like, even though the market is a lot of technicals and statistics and algorithms, and options is this complicated Black Scholes model, and markets are very efficient, and there's a lot of trading that's done by computers. People are irrational, right? So when we have fear, we sell, we run, right? We run from markets. Anything that's unknown, right? When COVID happened, why did we sell off so badly? Because nobody knew what going into a global pandemic actually meant. You didn't know what that meant, right? And so we were afraid. That fear is one major way to recognize and analyze. I wish I could do actually on my channel. I will have a ton of videos coming about all of these different pieces, right? I can't fully explain everything right here, but there's something you need to know. It's called the VIX. A lot of you guys do know what the VIX is already. It's called the Volatility Index. It's also, its nickname is the fear gauge. Why do we call it the fear gauge? I'll tell you what it does, and that'll help you connect the dots. It's looking at S&P options contracts. Roughly, it's really two calculations, but roughly 30 days out, 30 days from now. So it's taking an insight. It's looking at what people are doing right now based on what they think is going to happen in the future. So imagine this. You have 1,000 shares of Apple or maybe the S&P. You woke up this morning, or maybe let's say 2 weeks ago, a couple weeks ago, somebody like me told you, hey, the market is starting to turn bearish, or this is bear season. Every August, September, or October, one, two, maybe even all three of those months is usually every year bad. Bearish, red candle came down. Ugh. And you didn't want to lose any money. But you also didn't want to sell all of your shares because you plan on holding them and accumulating more every month for the rest of your life to give to your children, right? Put in your trust. Um, if you were to do that, you probably want to be able to like hedge your bets. So people will use options. There's one way, right? 90% of people who are trading options are actually looking to get out of those contracts. They want the money. But that 10% is using options just to protect their wealth. So if the market does come down, you're going to buy puts in case we drop, just so you can make up some of the difference of the money that you lost. But you don't want to like fully exit thousands of shares. You don't want to do that. You don't want to like make investing trading. A lot of people do that. I think it's a huge mistake. You want to use options, right? So again, the VIX measures, it's looking 30 days out, right? And when there's a lot of people, right, placing bets, if you will, to the downside because they believe we're going down, right? Then the VIX will let you know, right? So let me show you the VIX. Let me dive right into the VIX. Oh, sorry about that. Actually, I did not come up the way I wanted it to come up. Wait, let me check something on my computer. Again, this is my first time live on YouTube. Appreciate you guys for being patient. I'll check the comments in just a second. Be nice. Okay, I'm back up. So it's VIX, right? So it's VIX, Volatility Index, right? Oh, cool, cool, cool. Somebody just Cassandra, what's up? I got your text. Okay, so this is the VIX. This is the VIX. This is the VIX. This is the VIX. Um, let me take all these numbers off for a second. Quick 101. All right. Um, When the VIX spikes, when the VIX goes high, when the VIX goes up, that means the market is coming down. And it's not even that it means the market is coming down. That's the connection in behaviors. Fear, buying puts to hedge my bet because I believe the market is going down, or this unknown is just giving me enough anxiety that I want to place some insurance on my thousands of shares or 100 or whatever, right? Or maybe you don't even own any shares. You're not really you're right. You haven't been investing for a long time. You just jump straight into trading, but you want to make money because you believe or you know historically that this is bear season, right? Which I'll show you that in a second too. Um, the connection is that when the VIX spikes, it's only spiking because people are buying insurance because people believe something is going down, or we just have literally just we don't know what's going to happen. And so there's fear, not hope, fear. Right. So, in a simple way, they're like, you want to remember this? When the VIX goes high, it's time to buy. All right. Really simple. If I had to give you just a pinch of the math, just to let you really take it a little bit deeper, the VIX is based on a factor of 16. If you can just remember 16, right? So all this year, the VIX has pretty much been under 16. If we're at 16 or under, that means we only have 1% volatility, which means the S&P is only going to move like 1% or less every day. Not the best, most opportune time for day traders. Swing trading, probably would say maybe it's always a good time. But when the VIX is that low, that means it's just smooth, steady sailing. As a matter of fact, let me do this real quick. Let me jump over to the SPY, S&P. Let me take everything off my chart. And let me just kind of connect that dot and show you this year really quick. All right. So if I go to the week chart, I just want to show you weeks, all this year. And if I start, where's the beginning of the year? It's right here. So this was the year. All right. What do you see? With the VIX, process this, put it together. The VIX being very low, not a lot of volatility. What is volatility? It's fast, it's speed, it's a lot of buying, a lot of selling. It's just so much volume coming in and out, right? That you got to be a bit more seasoned because things are faster. So yeah, you'll make money faster when things are volatile, but you'll lose it faster too. Right. As you can see though, this year, very nice, slow, easy uptrend. We started the year off, made a little pivot right here, 1-1, and then for 1, 2, 3, 4, 5, 6, 7, 8, 9, a little pause, 10, 11 weeks. We went straight up for 11 weeks. Right. What happened right in here? This was the last time that the VIX spiked and jumped up to 20, about 21, 22, which I'll come back to the VIX in a second. Market came down, dropped about 6%. If you're in insider trading, I posted last week and I said, this is all the stuff I do. Like you guys can literally learn to do what the quote unquote advanced traders do. It just takes time to get confident with it. But the things I'm doing they're not like rocket science genius level. I just look back at the last time, I was clearly trading around then, but for what's happening now, a lot of times I just look back. So we dropped 6%. And then what happened? We recovered. Broke to new highs. 1, 2, 3, 4, 5, 6, 7, 8, 9. About another 8 or 9 weeks of nothing but buying in a market that is not very volatile. When the VIX is low, you'll get these very clean, nice, beautiful uptrends. Why? Because there's not a lot of volatility. There's not a lot of fighting with bulls and bears. Right? It's it's almost like wrestling or playing tug of war. Not tug of war. Is that tug of war? Yeah, tug of war. It's like playing tug of war. You're a bull, and the bears on the other side of that rope are fifth graders. Fifth graders don't have that much strength. There's not going to be a lot of volatility. We're just going to keep pulling slowly until they all fall over, right? So not a lot of volatility is a great thing for the market. If you're more advanced, you love volatility because then it's fast money, right? So these last 3 weeks, I won't look at this week just yet, but if I just wanted to show you from the highs with that VIX spiking, we dropped about 6%. If we look at where we were the last 3 weeks, same thing from the high, the VIX spiking up to about the same exact place, 21, 22. 6%. All right. And as you can see, we had a really big gap, went lower. So I'm gonna go to the 4 hour for a second. Actually, no, let me go to the day chart. I'll go to the day. All right. So that was that 6% drop. It wasn't smooth. We actually dropped for 2 or 3 days, pushed up for 2 days, dropped again, ranged, pushed back up, and then had a really nice drop, gap down. And then because of Japan's market, right, and all of that selling during the night, you woke up today to a really, really bloody, bad, ugly global view of what was happening. So for the next few months, you're going to see a million people talking about recessions, corrections. Recessions happen, they're cyclical, they happen. Don't be surprised. Corrections happen, don't be surprised. It's like, what do you do with them? All right. Matter of fact, let me stop sharing for a second. Let me check the chat. Just see who I got on. Uh Monique said it's okay, take your time. Thank you, Monique. I appreciate that. Because going live is a it's not stressful. It's just for me. I want to deliver and be so on point that today's like today is just like whatever. Just keep it going. Make sure you do what you need to do for the people. So I appreciate that, Monique. Dr. Nadiva said, take your time. Appreciate that. You're doing great. You're doing great. Anthony Rice, what's up, man? That's my guy. He said, hit the like button. This guy knows his stuff. Hit the like button. Yeah, I got to learn all the little YouTube stuff you're supposed to say. I'm just here to teach, man. I ain't trying to be famous. I'm trying to make as many of y'all as much money as I can make you by giving you some skills that literally will matter 20, 30 years from now. Because I'll be trading 20, 30 years from now, right? I want you to have that level of commitment to this because it's life changing. Let me see. Oh, Dr. Ndeep said I don't see the numbers for the VIX. Got you. I'll go back. Annette, what's up, Annette? How you doing? Um, Father Legend said, imagine the accounts that got liquidated on margin calls last night from this morning. Ooh, yeah, that's a whole nother topic. Ooh, that's another topic. Jerome said, smash that like button if you want to make some money. Smash the like. I do hear people saying that. Uh, I'll get there. Hey, y'all smash the button for. I don't even know how that works. I don't even care about the YouTube money. I know how to trade. That's not even my goal, right? It's really not. I could care less about that. Okay, so I checked in with y'all. I wanted to do that real quick. Okay, let me back up just for a second. So the VIX, the VIX volatility index. When things are bad, when the VIX goes high, it's usually time to buy. Let me go back to the VIX for a second. Let me go back to the VIX because what I want to do is, oh, maybe I could do it that way. Oh no, it won't let me. I gotta click on this button first. Dang, that sucks. Whatever. Okay. So the VIX. So what I'm going to do on the VIX really quick, I want to go back to a week chart. I bounce around time frames a lot. It's just when you're working with somebody like me, like this is normal. Some of the stuff that people would call advanced, like switching time frames. I've been doing this for 30,000 hours, right? So the benefit is that you get to see the value of that. Don't be overwhelmed. Again, 30,000 hours. If the time frame jumping doesn't register or that's a little jarring for you, right? You rocking with somebody who's mastered his craft. The time frames don't mean anything to me. Um, I can trade any time frame, right? And I understand how they connect. So what I want to do though, real quick, is I want to show you those levels just really quick. Um, I'll put this down at 16. So that's 1% volatility. What's 16 times two? If the VIX hits 32, is that 2% volatility? Three, four? Like how do you figure out? And why is that important? Because if I know the VIX is under 16 or less, I know that we don't have a lot of volatility, which means nice, clean, beautiful uptrends, which is all we've had this year. It's been a very easy year. You've been struggling this year. You got to dive in. You got to get committed. You got to learn from somebody like me who really can help you to see things clearly and give you the why, the math behind it, the statistical reason that it works. I could tell you to buy on Fibonacci at some level. I could tell you to take a crossover. I could tell you to buy support, but why? Why? Because I said so? No, because there's something undergirding this. There should be some math, just a little like something that makes sense so rationally, so logically. You can't even argue it. Right. So 32 is the next level. If the VIX hits 32, you're now at 2% volatility. All right. Today, let me just jump over to where we. All right, where did we go? This week we went as high as what is that? What's this high? 65. Woo, 65. So at some point we were at 65. If I just do the math real quick, you should do the math with me. What's 65 divided by 16? 4%. So that means when we were at that high, the volatility was at 4%, which just means if we were to stay at 4%, like if the market just sat way up there at 65, every single day you could expect the market to go up or down 4%, which is huge. And think about the window of think about this. If the VIX is higher, that means the days are going to be bigger, wider. There's going to be more price action happening, which means if you're a day trader, yes, it's faster, but you got a lot more opportunities. All right. So if you're a day trader, you really should love volatility, but learn how to really, really measure your risk. The problem is people get excited about the volatility. They really can't handle it. They don't know how to how much money should you put on every trade? You used to put X amount on every trade. It's more volatile now. You got to adjust. Your indicators now at 4% volatility, they may be a little different. They may throw you off in a way that you don't really understand unless you actually understand how they work. I tell people all the time, don't tell me what indicator you use. Tell me the pattern and when it doesn't work. That's how I know you know how to use it. All right. I love Bollinger Bands. All right. The way that people teach, generally the way that they're taught, they don't work. People use them wrong. Right. So I figured out the hard way how they actually work. They were designed for low volatility. So what happens when we get volatility? You got to learn how to rethink that specific indicator because low volatility markets are not the same as volatile markets. 4% is not the same as 1%. All right. That's huge, a huge, huge, huge difference. All right. That's huge. All right. Let me show you one other thing real quick. I know y'all like this. This dude have all these rappers' names on this chart. Yeah, I do. Oh, I think I took it off. So let me do this. Let me add one thing real quick. I'm gonna give you this one last thing on the VIX, and then we're gonna move on. Um, I type in simple moving average. Um, if you don't know what the 200 period moving average is, it's a huge technical buy signal, generally speaking. Um, just put it on your chart for now. Again, I'm really just getting started with my YouTube channel. A year from now, I probably will have given you guys about 200 videos covering everything that other traders don't cover that I think matters more than what most people cover. I don't want to do any videos and put out stuff that you can easily just find everybody's already covered and touched. All right. That's not me. I want to give you something new. I want to give you something powerful. I want to give you, I got to change this to the week chart. I want to give you what's not being covered. I want to challenge your ideas. All right. That's what I want to do. Um, so the blue line, check this out. This blue line, that's the 200. So let me make one last connection. Back here, no, actually right here, I'm sorry. 415. Why was this 415 when we touched that 200 period? If you don't have a 200 period moving average on your week chart for the VIX, it's the weekly, not the daily. Not the daily. Money's made over time. Y'all keep looking at the day charts. Way, and I get it. Don't get me wrong. We all love day charts. It's where everybody starts, but you can't stay there. Right? My job is to add more complexity, more skill set, more perspective, more philosophy to how you think and how you process. Everybody knows the 200 on the day. But have you ever put the weekly on? The weekly 200. Oh, that's right. That's my favorite. So that was 415. We jumped up to about 21. If you look at where we are right now, last week we jumped up, right? We touched. Matter of fact, if I go, well, actually, I'll leave it on the week. As you can see, we hit that 20 area. All right. We jumped up to 32. We almost hit 30, I think, like Thursday or Friday. And then because of Japan's market today, just huge spike. Huge, huge, huge spike. All right. So if I go back to the S&P for a second, you can make that connection and you can literally see right there. Right. This is when those 3 weeks, that worst week, that was when the VIX spiked. It only went up to test that 200, slowly came back down. And when it came back down under 16, low volatility, not a lot of right wrestling, not a lot of fighting, one side just slowly winning every week. What happened? We went right back into this bullish uptrend, which we were already in, and we just slowly started making new highs again and again and again and again and again. Okay. So how could you have let's think about this for a second. We know this is the bear season of the year. You could have seen, especially if you were in insider trading, me and Joel post this stuff all the time. Like it's not it's not magic. It's math. There's no crystal ball. There's only like illusion and manipulation. Anybody talk about a crystal ball, weird stuff like that? You gotta be careful. Right. I can show you everything I'm doing. Right. Every single thing I'm doing. I'm not afraid to like give you what I use. I want you to use it. I want you to make more money. More money. I don't care if you take my classes or not. It's not what it's about. Right. That's if you need the in-depth, hands-on, right? You need that level of you're ready for that type of commitment to get really serious. Sure. Find the best educator out, take the class, get educated first with anything you do. That's just basic, right? That's not special. All right. So you know it's bear season. Me and Joe told you about we've been talking about the VIX for years. Maybe the VIX is new for you, right? So let's go back to last 2 weeks. I'm going to go back to the day chart. Um And I actually want to introduce, I did this in my last live. I know there's a ton of different indicators that people use. Actually, stop sharing for just 1 second. I know there's a ton of different indicators that people use. Me and Joel, and probably me for sure without Joel, because most of my trading career, we like stopped trading together, I don't know, a couple years in, right? So most of the time has been me by myself, right? And I'm just by nature as an only child. I'm that person, like, if I'm like, I'm the rapper that doesn't listen to other rappers because I don't want to sound like anybody else. So I've looked at YouTube content, but I've never paid for anybody's class because I found this indicator very early on. Like the first few weeks, I got really interested in trading, and I already had a background in how the math works, the statistics behind it, right? So I kind of went on this journey and was like very intentional about I didn't want to be clouded or polluted by somebody trying to give me a recipe. If what you say works, it works and it'll be on the chart, right? So I've probably watched more YouTube like trading content. And now, unfortunately, I just get really irritated. I can't watch anybody's stuff almost because they always are missing something. Everybody's saying the same stuff. It's ridiculous. It really is ridiculous. Um, so I want to give you a new quick framework for my favorite indicator. And I call it the perfect indicator, which is very, very intentional. I didn't say it was the easiest to learn. I didn't necessarily say it was the best. So why would I say it's the perfect indicator? Because we got to think about how and why, like why does the market move? What do you need? You like a stock that doesn't go anywhere all week. You buy it at $100. You bought one share. Friday it's $100. You didn't make a penny. Why? That would be a market where there's no volatility. There's no volume coming in. There's nobody buying. Right? So in its most simplest, how do we make money when prices go our direction? Right? When prices go our directions, but you need volatility. So here's why I call this indicator the perfect indicator. Because the definition is right there, y'all. They like the secrets are in the words. You got to study words. The secrets are in the words, right? The definition of volatility. Go on Investopedia and look it up right now. It's a statistical measure of volatility. I mean, a statistical measure of price dispersion. Uh-oh. Noble, I've never had a stats class, so I have no idea what the hell a statistical measure even is. And then it's a measure of price dispersion? Price dispersion. You probably never said the word dispersion. It's not like a commonly said word. Unless you've had quantitative roles, unless you've been somebody like me who had to analyze data because I'm working with my first gig in Bank of America and corporate. I was working like right under the guy who basically managed all the checking accounts. You know how much data I was touching every day? And I had to be able to analyze it using something to give us predictability. Um, you think about forecasting. I had a class, a grad school, literally was called forecasting. That's when I got introduced to moving averages. Before I ever traded, moving averages was in my forecasting class. So that's how I think of trading. You're forecasting. It's quantitative analysis. I'm not saying you got to be a genius, but it's not pushing buttons making money. As soon as you decide to do this as a trader, which is why I call this insider trading, investing's easy. Investing is dumb easy. It really is. At worst, you could just buy the S&P every month, every year for the rest of your life, and you'd be okay. You'd have more money. If you just did that from the dot-com bubble bursting in the 90s, early 2000s, or 2008 subprime mortgage recession, I guarantee 99% of you guys watching me right now, including me, would have more money than we have right now if we just were putting a committed, dedicated amount every month into the S&P. And NASDAQ performs better. So investing, like when people start to talk about investing, I don't know. Again, the statistics say you'll be a better investor if you just invested in um NASDAQ because it's heavy on the tech side. Last 20, 25 years, what rules the world? Tech. I told y'all 50% of the people, my cousin polled and said, hey, what stock are you buying today? 50% of the people in the room said NVIDIA. It's tech. The semiconductors, the chips they make go in all the tech that we love that makes our life easier, more convenient, blah, 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 right? So investing, that's like a 10-minute workshop. It really is. It really is. Trading, though, way more complicated. The psychology, oh my God, 20 times more layered to do this and do it well. um, I lost my train of thought, so I'm gonna just keep going. So that indicator that breaks down a statistical measure of price dispersion. The only way you can get to price dispersion is with something called standard deviations. I love for you to Google it, dive in. The simple way to think about it is like, if we looked at a class of students, 50 students in this advanced statistics class, the average, what is the average grade for the last 20 years? What's been the average? What's the average grade for this class? 300 level statistics class, Indiana University, right? Where I went. Right. I flunked stats the first time I had it. I love it now, right? So if you don't get it, don't worry, you can get it. Um, there's an average. Let's say the average is 75%. Then what's statistically the average of that average? I know that's so weird to say the average of the average, but think about this for a second. The way that Japan started to make better quality cars is they figured out, hey, we need to apply a statistical process to engineering and to manufacturing so that we have statistically less defects, which will give us better quality cars than America, and we can win on this car thing. All right. So Six Sigma just means six standard deviation. All right. It's a methodology, a way to approach anything. Operations, customer service, sales, anything, right? I gotta like go into this world with y'all just for a second, right? It's how you can then use statistics for better forecasting, for very, very accurate forecasting, how to enter trades. I only want to get in a trade when I have a higher probability of the trend continuing. And there's a way to see that. So without further ado, the only thing that I've been able to find, I fell in love with this from day one. You need standard deviations to really see volatility. You can't see it with just price action. You can't see it with MACD. You can't see it with supply and demand. You can't see it with Ichimoku. You can't see it with crossovers, moving average crossovers. You can't see it with support and resist, all that stuff. You can't see volatility, and that's what makes you money. So I wish I had a drum roll. The one that you need, I'm gonna put it on the chart. We're gonna go through and cover some things, and I'm gonna ask you guys for some stocks so we can look at some things that you're looking at and talk about like what's happening right now too. It's Bollinger Bands. John Bollinger, like me, had a statistical background. He loves stats. All he did, technically, if you can almost envision it for those who know, if you look at a bell curve, and the average is right in the middle, and the bottom tail is where all the students who get Fs are. Very low percentage of students that get Fs though. In the all the way to the right is the students that got perfect on the final. Very, very small percentage. So it's statistics. If you tell me I got a 99, I know you're in like the 3, 4 standard deviation. It's very rare, which means you're amazing. Right? You can only see that. Flip a bell curve sideways. That middle average is now the 20 period moving average. All right. So let me go to the chart. I'll go to the chart. I said enough. I probably stayed on that long, but whatever. All right. So let me do this. I'll put it on from scratch. Bollinger Bands. Now here's the trick. Here's what most people mess up. You got to go in here and change this to -1 and +1. -1 and +1. The midline is just that 20. The midline is the average. All right. I'm gonna walk you through it. If this feels a little like, oh, you pulled up some complicated stuff. No, don't worry. It's gonna get real simple and easy. Matter of fact, let me do one thing because I always like to keep this stuff the same. So if you ever watch my show from here out, the dotted yellow line is always going to be the average. Why is it important to know where the average is? Because price always comes back to its average. Always, 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 always. If I go to a quarterly chart, I'm on the S&P. All right, we bounce right here off the average. COVID, we tested the average. Few years before that, we bounced off the average. We tried to get down there right there, right? So, so think about this for a second. Like the same way that I say this all the time. I gotta start using some new stuff, but you're probably new to me. The same way that you are, like matter of fact, for a second, I'll go back to the week chart for a second. We'll do it this way. And then, and those 6% drops that we talked about earlier, all we did was go to the average and we bounced back up. Right. So what's another way to think about this? Anytime price is in an uptrend, like Noble's definition, I want to give you guys something new. The definition of an uptrend is not this. It's not, hold on. This is what everybody teaches and it's wrong. People tell you, oh, this is an uptrend. Higher highs and higher lows. That's an uptrend. Is it? Is it? Why? I know in a basic sense, you're going to say, well, because it's going higher. Okay, cool. But go deeper than that. What's actually happening? Mathematically, what's happening is prices in like the 90th percentile. If you're in the top 10% of NBA players, you're an all-star. If you sell products on Amazon and you always get 4.5 stars, 90%, you have an amazing product. If you average in whatever class you're taking right now, 90% is your average. You're at the 90th percentile. You're an amazing student. So it's all the same stuff. Like trading literally mirrors life. Right. So every single uptrend to Noble, because I'm using the statistical background, I want y'all to challenge me on this by pulling up Bollinger Bands, putting on the 1 standard deviation, tweaking it, and just looking. Just look. Just look. All right. Just look. I'm gonna prove it to you real quick. Prove it to you real fast. This is all you need. This is the only indicator you really need to master. All right. Or that you should master first. I'll go all the way back. This is the S&P, and I can do this. I can go through 80 years in literally like 30 seconds. All right. Where was the first year? Right. 20 periods. The first year. This was I can't see that. What is that? 1949. Right. See how that year was above this one band? It's now at the 90th percentile area. That's where the trends start. If we're not above the 1, I call it the 1 because it's the one indicator you need. It's the one indicator most people don't understand. It's the one indicator that perfectly connects back to what the definition of volatility is, which is what makes you money. All right. Think about how many trader shows, gurus you've seen that never talk about Bollinger Band, standard deviation, and its connection to volatility. That's crazy to me, right? So this was the year 1949 where it was like, okay, something's happening. We're now in that area where mathematically, this is where every single uptrend you'll ever see, this is where they start and stay and form. They're always above the one, right? So check this out. From 1949, every single year, even when we had a pullback, all we would do is bounce off the one, bounce off the one, go back up, bounce off the one, go back up. Came down here, got to the 20, pop back up. Right. This was the first bar inside of those two bands. Whenever price is inside of the bands, every single time we break a trend line, we're just going back inside the bands. It's math. Forget the lines and drawing all this cute, pretty stuff. It's the math that's actually like what you should know. Right. Every time the market reverses from uptrend to downtrend, it has to cross over the average. Like you don't go from depressed downtrend to excited and happy about life without literally crossing over from right low. Right, if you could put your feelings into numbers, they would be low, and then at a certain point, you're gonna start to feel better. That's like when you creep back inside the bands. So when you get back above the average, you're now you're now like, how do you feel today? Oh, I'm pretty good. I'm okay. Like when you go to your therapist and you're like, I'm okay. You're now just back at the 20. That's all it is. You're back at the 20. 6 months later, you really healed. You've done that emotional work. You're like, man, I feel amazing. That amazing on a chart is above the one. That's all. Nobody told you. Million gurus out here. Nobody understands statistics when that's what trading is. All right. So what do you see? We got back above the band again. Oh, actually, no, hold on. I want to go through this just real quick, a little deep with a little bit of detail just to prove it to you. So where did we get back above the one? Well, we got back above it right here, but we kind of ranged for 4 years, didn't go anywhere. And then this candle right here, 1980, the year Noble was born, great year, got back above the one. And then what happened? 80, 81, 82, uptrend for years. Look at that, for years. Look at that. All you needed was the one indicator that would give you statistical reality. That's why you watching me. Right? That's why. I want to give you something that I know you're not getting. Right? That works every day on everything and always will because it's math. It's not noble. I didn't invent statistics. I just love stats. All right, so we got above in 80, and then we did not creep back inside the bands until when? 03. That's from 80, made the highs at 2000. Yeah, we pulled back inside the bands. But that's a 20-year bullish run. And then where are we now? Where are we now? 08 recession came down to the 20 on the day chart, 20 average. And then we were up again, got back above the one, and then we just took off. Because this is where all of the money's made. This is where all the money's made. That's why like buy low, sell high is a recipe for losing all your money. But think about it for a second. Buy low. If you buy low when we're statistically in the area that's most likely to continue to go down, you're just guessing. People always want to like buy the bottoms. Buy low, sell high will literally lose you all of your money if you think it works and you think it's that simple. It's not. It's not. Recipe for disaster. And people think like, oh, well, I'm an investor, so buy low, just like I'm getting more shares, even though it's lower. Yeah, but if you're investing in a stock that's underneath, matter of fact, let me go back for a second. Actually, let's do this. Shoot me a couple stocks. I want to look at a few stocks for you guys. Just type it in. Still watching? Just type it in, and I'll pull it up, analyze it for you, free of charge. um, I'll pull up one real quick that I know. I don't want to offend nobody, but I'm just go to it real quick for a second. And actually, you know what I'll do? I'll change the time frame just for a second. I want to go to a quarterly chart to make a really, really, really clear point. Really clear point. I'll take everything off my chart real quick. Why did I go to a quarterly chart? To me, As soon as you start talking about leaps, long term, basically buying options contracts that are like a year or more out, you can't predict what's going to happen 2 years from now. You can't see that volatility. You can't have precision. You don't really have any trust. I mean, you can go off fundamentals and all that. That's great. That's cool. You need some math. You need something here that you know actually means something serious, tangible, real. But you got to look at the right time frame. You can't judge if a stock is about to like if it's in that most volatile area that we want price to be. If you're looking at a week chart, doesn't line up. The month, too short. Got to go to the quarterly. And we get earnings, which really is what stimulates and gives consumers, shareholders rich loyalty to companies by what? Earnings, good earnings. We only get 4 a year. Quarterly chart. It's perfect chart. Perfect chart for that. Because in only 8 bars, that's 2 years, right? So you don't need, right? You go to the quarterly chart, think about it. A year out is just 4 bars. So if you're buying when you know it's the most volatile and has the highest chance of going up, you don't need 35 bars. You don't need to be sitting waiting on this thing to move. My trades, they win fast, they lose fast, and most of them win. I know a lot of people say that, but just rock with me for like a year. You're gonna be like, oh my God, like I don't even know what anybody else is teaching. Or you might realize a lot of people are not teaching. All right, let me before I smash some toes, let me do this. So this is forward. Just thinking real quick, long-term investing. But when the quarterly chart is here and they're now statistically underneath that bottom band, like if we're here and you're like, well, Noble, shouldn't I keep buying? I'm just buying low. I want to buy low, sell high. No, it's probably gonna keep going lower. Which is if don't get me wrong, I get it. You're buying these shares, you want to hold them for years, for decades, you want to give them to your kids. I get it. But what if that stock is in that downtrend for 5, 6 years? You just missed out on putting that same money into a stock that's simply in an uptrend right now, statistically where you want it to be right now. I don't want to wait. I don't want to wait just to see my money even start to move. So like the whole buy low, sell high. Again, there's nuance, there's complexity there. We throw out these mantras that you heard from day one as an investor or trader, think it works, and you never question it. Question everything. Question everything. I tear down everything people tell me. I do. By nature. That's just how I function. Like I was probably born on some level to be a trader because I question everything. All right. I analyze everything. I go to a restaurant. I don't even order. I don't even order what I like. I don't even trust my own like at a restaurant. I'm like, what's the most popular meal here? That's one. It's a statistical question. Two, I'm like, if this is the only time I'm ever gonna be here at this restaurant, this is my only day. What do you recommend? Like, what's the one thing I have to have? I'm asking a statistical question. I might love salmon, but if you telling me the Creole, whatever, some kind of bowl is like it, then there's a higher percentage chance that I'll be satisfied. Right? I think like that. You should think like that. You should question everything, right? So again, I just wanted to show you four real quick. Um, for 1, 2, check this out. For 1, 2, 3, 4. Oh, wait, let me draw that box again. Let me draw that box again. Right in here. So yeah, Ford was doing this thing. For 4 quarters. That's 1 year. You were, and don't get me wrong. I know if you bought way down here, yeah, you're like, oh, but I made money. I bought it down at 4 and 5. Yeah, but you had to wait. You had to wait a while. And that's cool because it's long term, sure. But there are companies that fail. Like there are companies that literally don't make it. They stay in those downtrends so long that the company just literally fails. Every company that is a stock right now will not be around 20 years from now. Some will fail. Some of your favorites will not be around. I know that's hard to believe, but it happens. All right. And then what happens? Ford has been inside this one big bar and really back inside the bands, going nowhere, going nowhere every single quarter, going nowhere because we're inside. We're not like we're barely above the average, barely above average. That's not where you want to buy. It's not. It's not. Okay. So let me stop. I'm showing my chart for a second. Let me look at some of these questions real quick. Um, Oh, um, L Light says what makes it a bear market versus a correction. So it's a little tough because for me, if we're underneath that -1 stand that bottom band, to me, because I can prove it to you, the math makes sense, blah blah blah. That to me is like a a downtrend. That's where all the downtrends happen. That's where every indicator you're going to use will be telling you, "Oh, we're short." Even if you didn't have MACD, stochastics, RSI, Willie percent, or all that crap on your chart, all you need to really do is look at those statistical standard deviations. If we're underneath the one, we have a higher chance. Uh-oh, this is really, really, oof. This may be where that downtrend starts and continues for days, months, years, depending on the time frame you're looking at, quarters, right? As a fun fact, on the year chart, longest chart we can look at, the S&P over those last 80 years I just covered with y'all, we've never been underneath the one. We've never had one bearish year on the market the way Noble views it, which is a statistical view. If we're going year to year, we've legitimately never had one bad year. The worst we do is come down, hit the 20, the average, and go back up. We've been doing that for 80 years. And I'm gonna go here just for a second. Because if I go too hard, I'm gonna be on a rant. You look at me, you see a human being. I got some hair because I just got to line up, right? Um, you look at me and you're like, man, that's a black man. Even though we know race is this socially constructed thing, but it's become very real. It has very real outcomes to how we're treated. I don't have to tell you the history of this country. I don't have to tell you black people as a community in terms of wealth are behind. And so far behind that statistically we'll basically never catch up. Whole different topic. So why are so many of us like so quick to jump to like stuff like crypto? It's because as a community, nobody's ever told us, and some of our quote unquote gurus don't even know the math well enough to prove it to you that literally from 1949 until now, the S&P on that year chart, if you just bought some every year, it's never been in remotely close to downtrend under -1 standard deviation area. Not 1 year. So why are we afraid to invest? Why are we the biggest consumer group and not the biggest consumer group and biggest investor? I would be okay if we were the biggest consumer group and we were making the most money from the market. I'm okay with that. I'm okay with that. I really am. I gotta step on some toes, man. People out here claiming to be all different kind of stuff. And it's not ego. It's not even the little cute chart patterns. It's the math. It's the statistics behind it. So if there's one thing I want you to walk away with, for sure, it's that Noble told me and showed me since 1949 until now in the S&P, we've never been bearish. We've never been underneath the one. Not for 1 year. At worst, all we do is come back to the average and go right back up. 80 years. What do you think is gonna happen? We about to all of a sudden start going into 10 years of downtrends? Nah. Statistically, it's probably not probable. No. No. So why do people go crazy when like stuff like this happens today? Because we're thinking so short term. When 10 years from now, nobody's gonna care about today. A year from now, nobody's gonna care about today's bearishness. Nobody's going to care. If you have a long-term view, if you really see the market for what it is, it's been bullish since inception, or at least since we came out of like the Great Depression. Let me be fair, right? Great Depression was bad. Those first 20 years, we didn't even have the I couldn't even put Bollinger Bands on the standard deviation there because it's calculated needing 20 periods or 20 years because I was on a year chart, right? So we went a little bearish for a second, but it's literally we've been bullish for like 80 years. Well, different perspective. Different perspectives. Ooh. Jerome, I love it. Jerome says someone is going to call themselves the world champion investor. Yeah, we love all these little cute names. Yeah. I don't know. Y'all be listening to people I would never listen to, but that's a whole nother story too. I'm trying, bro. I'm so trying not to go there because y'all know I wanna. I know this space. I love this space. Like I've been teaching since like 2011. I was teaching middle school kids before I ever charged $1. Ron Clark Academy here in Atlanta, Georgia. I taught for 3 semesters for free. I just wanted to see if the kids could learn this stuff. I was thinking about maybe teaching. All right, I'm patient. I'm calculated. I taught for 3 years kids first to prove to myself that I even really wanted to, but could teach adults for 3 semesters. They memorized all the companies in the Dow. They could read basic candlestick charts, supply and demand. They could tell you about. I didn't even know what I know about Bollinger Bands now. I didn't even know it. Right. So I've been through a lot to get here. Right. You literally are working with somebody who's been doing this for a long time. Okay. To go back to that question. So let me oh, I think I could do it. Oh, actually, no, let me do it this way. Let me do it this way. So I'm gonna say this too, and this is in love. I want you guys to get very, very, very used to using Investopedia. Any terms people like me say, you can ask me, sure. Investopedia is where I literally spent like 8, 9 months. I was on Investopedia every day when I first started because I was trying to get serious, right? So that's in love. Ask me, sure. But if I don't give you the answer, 2 seconds away, right? And I always want to give you guys anyway. Like I'm always gonna try to give you um like technical definition. You know what I mean? So I'm just typing it in. I should have pulled it up on screen, but I don't even want to mess the screen up. So what is a correction? All right. Usually defined as a decline of 10% or more in a security. 10% or more. Have we fallen 10% or more? And then 10% from what? When? What range? 10% from the highs. Have we fallen 10%? That last pullback I showed you, the VIX jumped up to 21, S&P came down 6%, went right back up to new highs. No correction. Are we in correction territory now? You tell me. I'll show you in a second. Let me go look at some more questions. Um, let me see. Nope. Cassandra. Yvette said doesn't work with day trading. I'll show you. I'll show you. I'll show you. Oh, okay, cool. Costco, Tesla. Um, yep. Yvette gave me SOUN, which is I can't forget the name of the stock right now. I know it's like start with Sam. Anyway, I'll come back to it. Apple, of course, everybody wants to look at Apple, Walmart, Tesla. No. What is TSM? I know what it is, but I can't think right now. BA. Yeah, I definitely know BA. Um, Boeing and then SoFi. Okay. So I'm gonna hit some of these. Before I do that though, let me go back to the chart and I just want to show y'all one or two last things that I think will also help. So here's what I want to do. It's kind of easy to talk about all of this stuff, but one of the things I feel like I'm very, very like legitimately the most proud of in my career doing this, and not just for me and like making money for myself, 'cause that's first and foremost, right? But helping you guys using my God-given gifts and talents, like really having a heart for people. Because teaching is hard, man. Like I don't just throw these classes together. I know some people do, like and some people might even argue that you should just put it together as fast as you can. We got AI now. Type in the topic and let the AI just make a whole class for you. No, that's not me. I'm more old school. I love the development of a thing. I love testing. I've had like 6 pilot classes. My first little options class was like $500. Why? Because I wanted to pull in more people, not to make money, but I was testing how to teach it. What's the best way to teach it? And then I would teach it different the second time. And then I will give you different metaphors the third time. And the whole time I'm gauging what's the most efficient, fastest way to help you learn it. Right. So I really do take my time with my classes, right? I learned that in corporate. You don't just launch something, you pilot it first, test it, tweak it. And then when you launch the real thing of higher value, you make sure the value's there because you start off with something just to get right people to help you create it collaboratively. All right. That's how I flow. So one of the things I'm most proud of is the precision that I use and that I teach. With me, there's one specific candle that is the trade. If we break the low of this specific candle, that is the trade. For a statistical reason, for a volatility-based reason, um, there's a couple other criteria, right? Clearly, I can't like give you everything right here, but I do for a second. I want to put my indicators on the chart. I'm actually gonna go to my little M&M setting, right? I know you're probably like, what's the indicator on the bottom? So let me tell you what's on my chart real quick, and then let me show you the last few trades. Day chart, just day chart, just day chart. I want to show you some trades. I want to show you just the last few weeks. All right, last few weeks. Um, we're above the band. Check this out. See how when we get above the band, that's bullish. My candles are light blue. I'll show you. Well, I'm not showing y'all what I use. TTM trend. It's using a little bit of stats to literally color, like the color is telling me it's bullish. Now, that's not a perfect indicator. There's a little flaw to it, right? I figured out the flaw. Why? Because I was losing money thinking, oh, when we get 3 candles, just go the other way. No, it ain't that easy. No, it's not that easy, right? I had to learn the pattern of when it doesn't work. Every indicator works, but there's a pattern and a reason that it doesn't work. If you want to master it, you got to find out the pattern for when it doesn't work. Right? The definition is just like a starter. That's just to get you started. Right? So what you'll notice here is every time these candles are blue, these bars down here are blue too. Why? Because psychologically, I literally want my chart to scream buy. Everything's blue. It's like, how can I get confused on the direction? Everything's blue. Right? It's pretty damn hard for me to like not know the actual direction. Isn't that really why we lose money? Wrong direction, wrong time frame. Don't understand volatility. Didn't know you could on your options run a strangle or a straddle and go both directions. All right, lots to learn. I know. There's tons of stuff to learn in this game, but that's the TTM trend on my chart. Just gives me some colors that help to instantly. All right, you could change the colors. All right, you see anybody else using that? They got it from me or Joel. Me and Joel always argue it was really me, but I literally try to brand my students because nobody does the TTM trend and actually changes the colors. That's a Noble Woods recipe. Been doing it for years. All right. And as you can see, check this out. See how we're bearish? We're underneath the one. And then what happened down here? The squeeze, another indicator, TTM trade the market squeeze. The squeeze, when the squeeze is red, it's literally giving us like a trend of volatility. And think about it. Price and volatility are not the same. Like, which one is more important? What if price is going up, but the volatility is going down, decreasing? Which one do you trust? Most of you guys are going to take the wrong trade. You're going to be bullish because you think price is real. You think price is what's actually making them like, no, price is reacting. Price is reacting to and being shaped by the volatility. That's what's underneath the price. All right. So let me go here. The first day recently that should have like a just so easily should have made you say, uh-oh. Notice how right here, see how we got back. Matter of fact, let me do one thing. Let me take one little thing off real quick because I don't even I want to make this a little simpler, but I want to give you guys right something you can walk away with. You got the one. It's the one. It's that indicator. It is. It works on every time frame. It's statistical data, so it's giving you a little bit of edge. You'll never see price up here. Every single uptrend again is there. Every downtrend is under, right? So what you'll notice is right here, this candle, we peaked. As a matter of fact, let's go back to it. Like, let's pretend that this day just happened. We're back inside the band now. We closed inside of these bands. Huge, huge signal, potentially. Because every time we go from uptrend to downtrend, what always happens first is price is going to go back inside of those two bands before we're bearish, before they talk about it on TV, before these gurus you watch are going to tell you. That's where it's starting early before you even see it. The question is it going to go lower? Did we go lower? Did we break the low of that candle? Nope. Did we get back above in that statistical area where all the trends happen? Yes. All we did was range. We never went lower. We went back up to the upside. All right. So when we had this day last week, my students, I love y'all. If you're watching and you're not one of my students, cool. You kind of are a student now, but you like a digital student, right? So cool, right? And I want to help make you money, regardless of whether you ever take a class. I don't, right? That's not the thing, right? Who's like connected to me and for me? Yeah, God will send you or send my students my way. I don't worry about all that, right? I just do what I do. But this was the bar. This was the bar where the question is what if we go lower? If we go lower, 98% of the time we're going to the average. If we break that low, what do? We went straight to the average. So, so right here, that little candle right there. And I could say like a lot more, but I'm trying to you right. I'm trying to keep it simple enough for you to get like, oh, there's reason we're taking trades. Yes, yes. The volatility's changed. We're back inside the bands. That's huge. That's huge. That is huge. Um, almost for a second, think about it like basketball. If we're above the 20, we're bullish. We're on the bull side of the court. So what happens when like right? Think about basketball. All right. And think about like hood basketball. You know what I'm saying? I grew up in Gary, Indiana. You make a shot, you get the ball back. Right. That's how we play. So this uptrend is hitting the shot, getting the ball back, hitting the shot, getting we're staying on my side of the court. All right. As soon as we get here, we get to the average. Now we're right at half court. So who's most likely to hit the next shot? You don't know because we're at half court. We're not on my side. We're not like deep in the paint where I can shoot and get an easy shot, but you're not at an easy shot either. We're right there at the average. So at best, all you can do is and think about it logically. If I've been winning, I just scored 20 points in a row. All right, you stole the ball. We're now at half court. As a bear, you still haven't made any money. You're not winning. So if you don't do something dramatically to win, guess what's going to happen? I'm going to do what I was already doing, which is a big, pretty way of saying we generally will bounce off the 20 and go back into the main trend direction. All right. But just knowing that we were going to drop to that 20, oh, that's such an easy trade. That's dumb easy. Oh, well, let me take that back because I hate the word easy. I'm sorry. I really don't like the word easy. It's simple. Simple. If you have the right framework, blah, blah, blah. Simple. Simple. All right. Oh, let me say this too. This always happens. We creep inside the bands. We're gonna go to the 20 and test it. If we can get under the 20, where are we going? We're going to the bottom band. Right? We're going to the bottom band. Now I know what you're thinking. Well, no, we didn't get to the bottom band. Yeah, we didn't get to the bottom band because people were buying and we pushed up one day. But if you look down here, what is happening to the squeeze? Which is really giving you like the top. This is price, but this is volatility. This is something about volatility. So volatility is like dropping off. So we're above the 20. We're still on the bullish side, right? Volatility is dropping, which means Noble last week was expecting the market to do what? To drop again. Not because of price. If you're only looking at price, you're missing a big piece of what this actually is. All right. So what happened? We pushed up. This little candle was perfect. All right, that was the one. That was another entry. Why? Um, because the volatility is dropping and because we're now even in this bar that I'm showing you 718, like all of those bears are technically kind of like slowly getting the advantage because we didn't break the high of like the easily clearest bearish candle, which was this was the day. Like this was the day there was a lot of selling. We get back above that. Now anybody who bought anything is now losing. Right. So if I'm a bear and we got back up to 564, why the hell would I still be in? Again, we're now above the band. If we get up there, why would I be a bear? Why would I be bearish up here, holding on, hoping my trade drops? You're just now going to lose even more money because the statistics are against you. All right. I could go into a few more reasons, but I'm just okay. So there, bam, bottom band, first little red bar on the squeeze, red dot. And now we're under the bottom band. Again, this was 724. So all of this today, you got the signal that the market potentially was about to be bearish. 717, a couple weeks ago. a couple weeks ago. All right. What happened? We bottomed, squeeze getting a little stronger, volatility getting a little stronger, right? And this is what we'll do. We'll push up, right? We jumped up here. Now, if you're a a bull who was buying down here, you think you're a genius because we push back up. But there's a little statistical concept you got to learn. I mentioned it earlier. It's called regression to the mean, which just means we come back to the average. So even when we're in a downtrend, we still will go back up to the average, and then if we can't go anywhere, we just drop again. All right. What you should have known, I'll walk you guys real quick through a trade because I was actually in on this day. I bought puts. Matter of fact, let me actually show you what I bought. Well, I won't show you what I bought, but I'll show you the right here. So this candle right in here. All right. If I was really patient, I would have waited until we like got back down here because if we're going to go lower, we got to go lower. Right? There's a patience I've learned. Like it's built into my trading. Um, because this was a ranging bar, I could have just waited until we came underneath there and just right as soon as we get down there, just short it. Just get ready to short it. Easy. I was a little bit more aggressive, so I didn't wait for that. I waited until the break until we got lower than this 726. That one little day where we pushed up. Right. So I'm gonna put a line so y'all can see it. So so I got in here on this day, 7:30. I bought 535 puts. Why? Why 535? There's a couple different reasons, but it's right there. Just the nice, easy. It's not the whole number. I could have did 540. I didn't want to buy at the money. All right. Just wanted to go a little bit out, get my contracts a little cheaper. Um, knowing that the VIX was spiking, I didn't need weeks on my contracts. People always ask, like, oh, how long do you buy? Like, how long do you give your contracts? If I'm in class and I'm teaching you and I want you to be safe, I'm gonna give you guardrails. Give them at least a month, 4 weeks, 20 days. Once I can like build up the complexity, more. Uh-oh. Wait, let me text something. Hold on a second. Okay. Oh, okay. Whew, I was tripping. I looked down my screen. It wasn't showing what I'm seeing right now, but it's like I guess my live is like a little bit behind. So anyway, okay, cool. So 535. So here's what happens. I'm gonna show. I'll walk you through it, and I'll go back and show you the 4 hour because I just the 4 hour gives you just a little more clarity as to what happened, right? So we pushed up here. I was now losing. I didn't give these contracts a lot of time. I didn't need to. I gave them until Monday, which was today. Right? We pushed up. I had a student that hit me up. Super smart, really great trader. She's made multiple six figures with trading. Right. But you really do need community. I'm working on like building my own kind of private community too from people that know the Noble Woods method, like who have done my 80, 90 hour classes and really know this stuff. Um, she bought some puts too, because we just happened to talk the same day. She was like, oh yeah, right. She trusts me. She knows I know my stuff. She's like, hey, you getting some puts? I'm in some puts too. Right. Next day we popped up. I was down like 95%. Should I have cut my trade? Nope. Did I panic? Nope. Why not? Because I know a statistical technique or concept that means we're all the time price. A lot of times we're pushing back up. It's not that we're bullish all of a sudden. We got to get through half court. So think about it again. The Bears are now, right? It's on the Bears side of the court. I steal the ball, or maybe I don't know. They lose the ball. We're now at half court. But they just like they had all the energy, they had the momentum, they had the volatility, right? So we can go right back down. We can go right back down. And that's all we did. All right. Um, oh, matter of fact, wait, hold on. Okay, there we go. I was like, wait a minute, I don't know, we missed today. Okay. Um, so I exited. I always tell my students, like, if you make more than 100%, you should never be mad. My contracts were up like 200%. Right. I wake up, I'm down 95%. The next day it's starting to go back the direction I know it's going anyway because I'm paying more attention to volatility than wait, hold on, let me draw this line. I understand how to like look at volatility and price. The volatility is just this is the volatility trend. Price will give you a pattern. I look at volatility, right? Um, Unfortunately, I normally would like sell half my position and then like leave a few contracts on. I got out of all of my contracts on Friday because I went through that little bit of emotion, right, where I was down and I had to not hope but trust that the 20 we would stay going with volatility. We hit the 20. I know we'll test that. We came right back there. All right. So I was like, you know what? Okay, it's Friday. Let me just take my money. All right. Made some good money. I'm never going like you should never be mad if you made over 100%. But when I woke up today and thought about what would have happened if I left those other contracts on, that would have turned into like a technically at the low, it was like 1,200%. I got out at like 150, 175%, somewhere like in there. So yeah, lost out on making more, but I doubled my money. And what I'm not telling you is how much I spent. But for like to grow your almost like what this can be. Imagine if years from now you learned a system that would give you this level of precision and you took that same trade, all right, up 150%. You left some contracts on. The others would have made you a multiple of 10. That would have been 1,000%. I didn't know Japan was about to. I didn't know Japan was dropping. I had no. I didn't know. You couldn't have predicted that. You couldn't have for well. I don't pay attention to Japan's market, so there's no way I could have forecasted that. Now, maybe if I look at the chart, it was pretty clear that like bad was coming. For the same reason, like we know here, right? Bear season, we crept back inside the bands, blah blah blah. Right. So I've explained all that stuff, but I didn't know that type of drop was coming. So imagine years from now, like this is what I always try to like give people the vision. Everybody wants to make this fast money. Everybody wants to be a day trader. It requires the most skill. Most people cannot do it consistently. It took me years of losing to get here. Years of losing as a day trader to get here. Years, years, not months, years. Right. But imagine you're here 5, 6, let's say it's 10 years from now. Paint a vision. And you can see this stuff as clearly as me. And let's say you even more disciplined than me. You would have stayed in the trade. It was up 200, 100%. That's great. But if you held on one more day because you just had more time and you knew that the volatility was down, imagine you had taken that trade with $5,000 and held it. It would now be 50. Think about the people, right? A matter of fact, I'm gonna focus on you. So I don't know where you are right now. Maybe your trades, maybe you're not even trading. I don't know. Maybe your trades are like 500, nice little 500 every time. Maybe it's like 5,000 every time, right? Maybe they're very meticulous, very calculated. Maybe you would have put 20,000 from confidence, experience, proven results, and growing your account. Again, nobody knew Japan was coming. Either way, though, if you had taken that trade with me, didn't panic when it went against you because you're using math to help you psychologically stay in the trade, multiple of 10. At worst, a multiple of 2 in not a lot of time, right? The problem is everybody wants to be here in like the first 6 months of trading. That's the problem. That is fundamentally a problem. Everybody wants to be. To make fast money, you need more skills, right? I just flipped to the week chart for a second just to show you something else. Same principle, same concept. What's the first candle? Which candle, Noble, closed back inside these bands? Oh, 2 weeks ago. Huh. 2 weeks ago. Oh, that's interesting. Remember when I said on the day chart I could have just waited until we broke the low? I basically would have just been taking this trade when the week was starting to reverse, where all the reversals happen. And you'd already know if we break that low, where are we going to? The 20. So whether I'm day trading, 5 minute, day, week, month, quarterly with leaps, years, year chart for investing. I'm literally doing the exact same thing. You won't find somebody teaching this. You just won't. It took me 15, technically about 13 years to develop this and years of losing. So I had to figure out how to win. Like I actually had to figure out how to win. Um, and then of course, because of the gap, huge gap, we just jumped down to the bottom band, which I already told you, even if this was a smooth move down, we still would have broken that low. And then where's the next place we going? To the bottom band every time. And then look at what's happening to volatility, even on the week chart. Higher time frame, more data. But what's happening? We're just losing volatility. Dark blue bars, they signal something. Each bar is lower, shorter, less. The number for each one, the actual specific number. Like, y'all got to get into these technicals, man. Like, I don't just have to squeeze on here to just look at it. I'm looking at the values. This is 2.27. This one is 1.97. This one is 1.4. Sometimes I'll actually calculate the percentage that the volatility itself is dropping. That's what masters do. That's what 30,000 hours does. My analysis, while it can be quick, oh, give me some time on the weekend. You'd be amazed if you watch me. Like if you could watch me just analyze one chart. I might be on that one chart for an hour. Just looking at all kind of stuff that I think matters because I understand how the math works. And not just the patterns. All right, so you're gonna hear me say that a lot. Patterns. Oh, dang, y'all waiting on me to look at these stocks. My bad. Um, okay. Dang, okay. What time is it? It's 9:55. Oh, it took me a while to get started. Okay, so I appreciate y'all for being, and I still got 29 people. That's crazy. Y'all still on, man. I love y'all. I really do. I do. Um, YouTube is like, let me say this real quick, just 2-second pause. It took me years of like, I had to take a class to like realize the power and value of YouTube. If you're in insider trading, you know me and Joe used to go live all the time. All the time we used to go live. We never put that stuff on YouTube. And I guarantee you, there's not two educator traders. Nobody can really touch me and Joe collectively. And by ourselves, we're pretty right. We're like pioneers. We've been doing this for collectively like 45 years. 15 for me. Well no, maybe like because Joe was probably, I don't know. Anyway, he was doing it before me, but all right, you got 15 and another at least 20 years. It's a lot of experience. So if you're not in insider trading on Facebook, join the group. If you got a shady looking profile, the technology is probably not gonna let you in. It's not me personally not letting you in. People be thinking like, "Oh, why you didn't let me in?" It ain't me. It's not me. I didn't do it, bro. All right. I want you to be in the room. All right. Um, I need some water. So let me cover your stocks. I'll do this because I can talk to y'all. So let me go back up. Let me see who's here. No, I'll do this. I'll do this to make it simple. I'll look at the stock you gave me on the day chart because I know that's what a lot of you guys are looking at. But I also want to look at the week. All right, so I want to look at two different time frames. I'm trying to again. I know for some of you guys that may be intimidating. It may be a little overwhelming. It's okay. It's okay. We're not trading. You know, you didn't give me some money to trade. Plus, I wouldn't trade your money anyway, right? I just want to teach you so you can do it. Teach a man to fish. I'm going to give you a pole, bait. I want to teach you what lakes to fish in. I want to give you all of that stuff, right? Um, so I'll look at the week and the day really quick. Yeah, I'll do that. Okay, let me write these down. 'Cause I'm not gonna be able. I don't want to keep bouncing back and forth. Right when you need a notebook. Right when you need a notebook. So I'm going to look at Costco, Tesla, Sound, Apple. Sheesh. Y'all really trying. Y'all got me working. Boeing. Oh man. Okay, I'm gonna start with Hood. Christopher John said my psychology kills me every time. Though being down 97%, I probably would have cut. I need to get my mind straight. I love the honesty. Yeah, yeah, man. And then here's the thing too, because I didn't give those contracts a lot of time, because I know how this little period works. I'm not missing a trade. Me with my level of skill, my right, and then I got to be real. I gotta be. This matters. I'm single. I'm not saying that to like woo somebody who might be like, oh, he's attractive. That means I don't have a wife and kids, so I have a lot more freedom than the average person who's my age. 44. I got way more time than you. I've invested more time. I literally sacrificed damn near all of my 30s to be able to offer my wife and family financial security. Like, I mean that. Like, this journey's been tough. It's been brutal, and I'm so glad I never went back to corporate. I had a few opportunities. 100,000 ain't enough. Once I started making it, I was like, this ain't enough. Like, I'm worth more than 100,000. 100,000? No, 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 bro. You're not gonna give me 100,000 every year and expect me to be happy. Nah, nope. So yeah, man, it took a lot to get here. And I was proud of myself, you know. But also mathematically, I was down 95%. So it's like, why would I get out? Knowing we were testing something that was it was very likely that we would go back down. Relax. Took a while to get here though, for sure. I used to panic and exit. Oh my God, I'm losing. Let me just cut, right? It's like you might as well hold the trades, bro. You already down 95%. Right. So I've learned that the market's tricky like that. Even when you know the direction, it's still going to do something to try to make you lose. Knowing the direction ain't good enough. It's not. It's not. The market is not going to make it easy for you. It's not. It's really not. Jessica said I do that. She said I'm so tired of losing. I'm still learning. Jessica, reach out to me because I know um I know your name. I think I know your face. I know we've talked a few times, but I hear that and I know you and I know who you're trading for. So DM me like right now. Um, oh, I thought that was somebody else. Okay, opulence. I love that word. Is that a name? Is that your name? Opulence? Golly, that's power. That's like noble, right? That's a powerful name. Opulence. This is some good teaching, sir. You are the composite man. Thank you. I appreciate it. Christopher John said a lot of people when they mid years are losing. Most will say, "Oh yeah, 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 man. Look. Erase all that. I have never lost a trade. I've never lost a trade. I've been doing this 15 years. I've never lost a trade. I started with $17 and I've turned it into 17 trillion. That's how people market. And sadly, somebody, I hate to say this, unfortunately, somebody black probably believes they did it and that it was easy. And then they buy that thing, they buy the class product membership, and then they're like, dang, this didn't work. Yeah, because they basically sold you the lie you wanted to hear. It's a dirty game. Ooh, it's like the new drug game. It really is. It really is. Noble was making six figures before trading from a degree, from multiple to like I was working. Ask these gurus what they were doing before COVID. Just ask them. Were they in jail? Were they struggling somewhere, learning from people like me? All right. It's a dirty game. It really is. I love y'all. So I need to say it because I'm just protective of my people. I hate that we do we prey on each other. We do, and y'all know I'm telling the truth. Um, um, continue to fall. Father Legend still waiting for those Noble to drop me. Noble taught me tease. That'd be dope. That'd be dope. That'd be dope. Jerome, you so. I gotta watch Jerome, man. Jerome, you gonna get me in a fight. Like a year, 2 years from now, when everybody kind of hopefully more people, of course, because y'all have shared know me. Oh, it's I don't even want the drama. I don't. But I've taught some people y'all know. That's all. That's all. I've taught some people that y'all know that would never say my name because they don't they need to be the man and get all the credit. Okay, cool. Get the credit. Get all the credit you can. Make all the money you can. Make all the money you can. Okay, so let's do this. Let's go through all of these. And two charts, two charts. And for some of these, I might pop to a day chart real quick because I forget who that was. But somebody asked me, "Does this work on?" I really just did Bollinger. Right? I think she what she was asking was just Bollinger Bands. Right? Here's the beauty. Here's the beauty. Let me go to the spot. 4 hour. 4 hour. Look. Just look. Like, think about exactly where I got in. It was right when we started to go bearish. Right. So right here, when we came back around, right? So that same trade on the 4 hour, I'm just showing you the details, right? I got in here. Price said, nope, uptrend, but it's going somewhere. I got some faith, some confidence. I trust my indicators. I know the math. Should come back down, should match up with volatility. Price will fool you. Volatility is telling the truth. Came back down right to where I got in. And what has price been doing for the last 2 days underneath this band? So if I wanted to trade on a 4 hour, I could. If I wanted to day trade today and go to a 5 minute chart, we were above the average all morning. And then when we tried to go a little bit bearish, what happened? We crossed over from band to band. And then now we're just bouncing off the 20 and bouncing off the 20. All right, this is statistics, y'all. Like, it really is. So when I say, I'm gonna go to my chart, Tesla. Was that the first one? No, Costco. So when I say, when I say that, you know, the perfect indicator is this one standard deviation plus a negative Bollinger Band. It really is to me. Look at Costco. You can already see it. Look at the uptrend. Blue candles, blue bars. It's screaming by me, Noble. Screaming by me. The VIX, when the VIX did that little drop somewhere in there, and look at this candle. Look at this candle. You know how easy this. Well, okay, I said I was gonna stop saying easy. How clear this is. We went from the top band to the bottom band in one chart, one day. One day. This was telling you I'm probably about to establish a downtrend. Probably. That's why, but that's statistics. Right? I never say I know what's going to happen. I know what's probably going to happen. I don't need to be right. I'll be wrong all day. I'm okay with being wrong. When I'm wrong, it's just like, oh man, that's great. That means there's more to learn. All right. So as you can see, Costco on the day chart right now. And I'm not pulling up to 200. I'm not doing like, I just really want to just real quick, where are we right now? Bearish underneath the band, matching up with the S&P. Let me go to the week for a second. And you already knew that. Look at the week. The first candle that said, hey, I'm back inside the bands was what here? What was that? A couple weeks ago? What did I just say? Every time we creep back inside the band, if we're going to reverse, super high probability. All we're going to do, if we can break that low, is come down to the 20. So right now, week chart right now on the week, maybe we're gonna get some buying this week. Maybe this week will end. Maybe this week will end up. All right. So if I'm looking at the day, I want to make my money in days. I'm really thinking swings. And think about time frame like this. If I'm on a day chart, I want to make my money as fast as possible, but the time frame is days. So I just need a couple good days. Hell, you just need one good day. If I'm on the week chart, now I'm looking at, I just need a couple weeks. But as you can see, we're right inside the band. All right. We're right at the 20. So it's possible to go back up. Yeah, it's possible. But look at the volatility. All right, look at this volatility slowly sliding off. Still bullish. We're above the 20. But if I'm on the day, I'm thinking a little different. If anything, you should have rode it down to the 20. That was a trade. All right. So when we're here now at the 20, again, Bulls have the ball, but they're standing at half court with the Bears right in front of them. If we go lower, if this week we continue to push lower, if this candle's bearish, and then the week after we break the low of that candle, guess where we're going? To the bottom band. Costco. That was Costco. This is Tesla. Tesla week chart. Um, so we had like 2, 3. Look at that. Like we got above the one right here. Popped up just to hit test the 200. And then we created this doji. I'm still reading the candles. Like, think about this. If we're right here and you see this, you're like, oh, we had a really strong week. And then we got some confusion just by literally reading. So I'm reading every bar, y'all. I'm literally reading and paying attention to every single bar. There's a story in every bar. It's adding to every day. You're just adding to the story. Every bar is a new additional page to the book. We talk about reading the market. That's what we mean. That's what I mean. Every day you're getting a new page. And if you can read it, if you really can read it, you'll start to know what's going to happen in the story. It's literally just like watching a movie. You know when that music hits, and the one dude that you know is that dude that will get at everybody, like who wants all the smoke. When he pulls out his sword and the music goes dark, you already know what's about to happen. He about to cut everybody's head off. I didn't watch the season finale of House of Dragon, but I'm thinking of that. You already know. You already know. You know what's going to happen. You can forecast what's going to happen. Okay. And then inside of that bar, all right, bearish inside of that, not moving. Uh-oh. Ugh. Right. So here's what I'm thinking. We get, and I want you guys to like start thinking this way. Think about this. Like anybody who pushed the market up, if we break the low of this candle, we close under that candle, all of the bulls are getting smoked. Why would they stay in? They won't. All right. Crept back inside. Pretty much all of these people are now losing. Gap down to the 20 right now, kind of pushing above. All right. So again, sitting right there at the 20. I know I said it's bear season. And when I said it's bear season, that doesn't mean every single day, every week is going to be down. No, even in a bearish market, you'll have the market will go up 2 or 3 weeks just to make you think bear season is over. To get you long, to get you excited and hopeful, and then it's going to rip back down. It's going to come back down. People like me will be shorting because I only get in when we break the low. I only get in when volatility is literally pushing down. All right. But volatility is on my side. All right. Um, yeah. So we right. Check this out. Right here, squeeze was still blue. Pushed up. Pushed up. Where was the trade? Where did you want to take this trade? Oh, if we can get back under. Damn, I'm drawing the wrong thing. We can get back under this candle right here. We get under there, we should drop. Now you had a 200 to go to. I think these are like daily and weekly 200s, right? Um, but again, volatility, the S, and I always like get in the habit, y'all, of looking at the S&P. If you can just like master the discipline of knowing where the S&P is every week, you'll make trading everything else easier. Everything is gonna connect. Like you're gonna like literally, I'm gonna keep saying the same thing over and over. Trust me. As I'm starting to go through all of these, I'm literally gonna be saying the same thing over and over. So many of these stocks are gonna be right at the 20, the average on the weekly chart. Right. Sound hound. All right. Day chart looks like we got a 200 right there. So if we go lower, you already know where we're going. It's right there. It's close. We tried to make a little right, so we were kind of behind today. All right, we gapped down, bad, blah blah blah. And again, it's bear season. We pushed up today, but no, but you said it's bear season, but we pushed up. Yeah, we push up in bear seasons. And then when all those people start losing, guess what? They hit the sell button to get out. When people like me and my students are hitting the sell button to get in, because I want to make the fastest, efficient money, even if I'm on the weak chart. Right. The recipe to do this and do it for years is not specialize in day trading. I can almost guarantee 98% of people would make more money if they had the patience to trade on a week chart. You only get one candle every week, and then you got the whole weekend to analyze it. Just gives you time to make really good, healthy decisions, great trades. but everybody wants to make fast money. That's why nobody's making the money they think they're gonna make. That's like that's like you playing at your little rec league basketball for like a couple years, and then somehow you like there's no barriers to entry. You can just go down Atlanta Hawks. You can just go down to the Atlanta Hawks stadium or any college and play with those players that are more skilled. You ain't gonna win. You ain't gonna make no points if you got one day to play in the NBA. You will not make a point. That's what like attempting to day trade with no skills. That's what it's like. That's what it's like. But it's attractive, right? It's the glamour of it all. Nah, I've been there. I've been there, done that. I have. Um, so we're getting some bearish volatility. Let me just go to the week. Um, okay, so this one's interesting. Okay, cool. I'm glad this one looks a little different. So matter of fact, let me zoom out for a second. Let me zoom out for just a second. Okay, check this out. Check out how ugly this is. I hate to say this, but we actually crept back inside the band's week chart here, which is 4-1 around the same time the VIX dipped. All right. We dropped from these highs. We tested the 20. Notice where we went. We pushed back up. Could not get above the 1. Why? Because the volatility is not strong enough. Volatility is not strong enough. So what have we been doing? This entire time, we've gone nowhere. There is no trend unless we're above or below. Now I'm talking about on the week, right? If I'm trading on the week, I can't do anything with this. There's nothing here statistically that gets me excited, right? And so I want to show y'all this real quick too. So this is why I love the squeeze, because see those little two red dots. Those two little red dots are saying, "Yo, the volatility is so low right now. I don't have any gas." Now that's good and bad. It means the see how the bands are getting like tighter, right? So it's kind of telling you like, oh, we probably not about to go anywhere because we don't have any gas, we don't have the volatility. But here's the great thing: eventually we'll get some volatility, and there probably will be like a nice and it's literally called the squeeze for that reason. There will be a squeeze of volatility. It's gonna squeeze and then it's gonna explode to maybe the upside or the downside. I don't know. But when I see those red dots, generally speaking, what I teach my students, when you see those red dots, you shouldn't do anything. Because why would you be trying to force a trade when the indicator that gives you volatility is telling you we don't have any volatility? You're just going to force a trade and lose. And clearly, we have not gone anywhere since April. So be careful with this one. All right. I'm just looking at it right now. I don't invest in it. I've never traded it. So I'm just going through these kind of certain ones, of course, I know and either own or trade or whatever, but some I don't. Apple's super strong. Apple's always strong. So uptrend, we went uptrend. Clearly, we didn't even do that slow peak inside the band. Apple just jumped down. So it's bounced off its average, which is good. Right. And Apple's like one of the few stocks that the S&P can be a little crazy. Apple will just still be slowly going up. Right. So we love Apple for that reason, right? It's one of those companies, right? But if I go to the day really quick, and let me take everything off. I go to the day real quick. When did Apple creep back inside the band? Day chart, right there. Ran to the 20. Straddled it for a second, went lower. Where did it go? Down to the bottom band. Squeeze turned red right here on this bar. Pushed up a little bit to fake some people out. Tested the 20. All right. Now, this is unfortunately like you should have been waiting for a trade on the break of this low, but we just gapped down so much that you couldn't. There was no trade to take. Like it didn't cross over those prices smooth enough for you to take that short. Right. So if it was me trading Apple, which right now I'm not trading, that's what I would have been waiting on. Volatility is going my direction. The week is telling me something important. The S&P is guiding me, but we gap down so much that, all right, you don't want to yeah, you. So entries is a whole thing, but again, y'all are gonna get a ton of videos from me in over the next I guess I would make videos indefinitely. But I got a lot coming. Like legit, I got like 200 videos coming in the next 12 months. Okay, that's Apple. Let's do this real quick for Apple, just for fun. Let's go to a longer time frame, just for a second. Just for a second. Quarterly chart. Look at Apple. Quarterly chart. Quarterly chart. Quarterly chart. Ooh. Ooh, look at Apple on the court. Like, when did Apple become like? When did Apple like? When did it get back above the one? Right here. When was that? That was October 2004. Quarterly. Above the one is still bullish. Above the one is still bullish. Came down, hit the 20. Got to get back above. Oh, got back above. Still bullish. Still bullish. Every quarter, still bullish. Still bullish. Uh-oh. Uh-oh. Bad month peeped inside. Now, this one was a little tricky, right? Because what did I say? I said if we break this low, normally we'll go down to the 20. We didn't get there. That's a caveat. It's one of those things in my class. Like, that's why you need like watching this stuff is amazing. Don't get me wrong. I want to keep doing these for sure. But you really do like and it's not me trying to sell y'all on something, because I'm not gonna mention, I ain't gonna even mention what I got coming up. Well, actually, I probably need to, because some of y'all probably want to know. But we don't all nothing works all the time. And then when we think about this too for a second, when you're on these longer time frames, there's more data, there's like more information. So Noble trusts the longer time frames more, but I've also slightly learned how to like with a stock like Apple, there's like a healthy what's the word? There's a few other things that I could have looked at right there to help me assess. Should I take a short right there down to the 20, or should I just kind of relax, right? So there's nuance, right? Clearly there's. And let's just say you would have lost, right? So you got in here with some leaps, you lost. Okay, cool. Right when you lost, right? Price got back up here, right? What's happening? Right back above the band, pausing, and you get this bar. It's telling you again, if you write again, with understanding of how beautiful the squeeze is. It's telling you we tried to go lower, we didn't. We're back bullish. It's just right back up again. Right. Right back up again. Bounced off the 20. Right there. Dropped inside here. Real ugly, right? A couple quarters, whole year Apple didn't go anywhere. Another 3-4 quarters didn't go anywhere. All right. Back up. So if we're longer, right, we're thinking about leaps. Oh my goodness. It's been fairly simple since 2004. Dang, what time is it? 10:20. I love y'all, but I'm gonna speed up a little bit because I'm so hungry. I ate this morning. I told you guys at the beginning of this, we left me and some of my cousins, some of my favorite people in the world. I woke up this morning in Opryland, Nashville, Tennessee resort. Was there just playing with the kids, talking to the y'all know what we do when we go on these little quick resort trips. Okay, Walmart. Matter of fact, let me start on the longer time frame. Let me start on the week. So check out Walmart week. This was a good one. Volatility slowly tapering off. If the S&P continues to go down, what do you think Walmart's going to do? Where is Walmart going? All right. We already broke the low of this candle. We already broke the low. But without any fancy indicators, we're just using this one. Can you see when the uptrend ended? Yes, it ended right here, because we are now back statistically. We are not in that 90th percentile of price. We're not getting the A+ pricing we want. It's changing. All right. Day chart, look at the day. Had two of the little red dots. Today's the first day you got the green dot, which means it was kind of volatility was a little tight. The way that the math is working, the red dot just means the volatility is abnormally low. It's super tight. It's real tight. We pushed up, pushed back down. Today that green dot is saying, hey, looks like right now we're probably going lower, which just matches up with everything else, right? Just for right now, right? Right now in this moment. Again, I hope you guys go back and watch all this, but if you're thinking like a long-term investor right now, and I probably should, I got to remember to say this to you guys more, but the show's called Insider Trading. Trading's way more complicated. Trading's like to me is the more fun because it's harder, it's more difficult, it's more complex. Like I love complexity. Like so I know you guys like want to probably want to equally or maybe even more hear about like long-term investing. Again, I'm still giving you some things that'll help, but you got to look at longer time frames. Like if you love Walmart, you want to like you believe in Walmart. You read the annual reports. You know which business segments make the most money. You know the name of the CEO, the C-suite. Like you know some things about its profitability. Like you're actually an investor, right? If you're an actual investor, then yeah, like dollar cost average, keep investing every month. Panic and worry if the quarterly chart goes underneath that bottom band because that's not a good sign. Like that's really it. Like you know. So I just wanted to say that because I know right now a lot of you guys are probably like, should I be buying? VIX spikes to 20 to 30 to 40 to 50. Should I be buying? Yes, it's a sale. If you really have a great long-term view, recessions are Black Friday sales. They're flash sales. That's all they are. If you're a long-term investor, that's all recessions are. That's all corrections are. Whatever you wanted to buy is now 10% off. All right. So make it practical. All right. You walked in your favorite store, everything's 10% off. Great. You walk in your favorite store 2 weeks later, everything's 50% off. You'd be so excited. You're gonna text somebody. So why do we, when the market is down 50%, as long-term investors, why do we like panic and run in fear? Like, oh, I'm gonna stop like this investing thing ain't working out. Now you're thinking like a trader. All right. No. So yes, these times when the VIX spikes, yes, buy. And there's more nuance. I want to say so much more. I do, but in just like a general sense, the S&P has been bullish for 80 some years. I showed y'all that. Okay. My phone just died, so I gotta plug it back up. Man, I gotta get better at this live thing. I mean, I can teach and I know what I'm doing, but this technical piece, good lord. I don't even want to watch this video myself. I gotta watch it again and go back and like make notes and stuff. Okay. So that's Walmart. Let me see. Where's the 200? Okay, so 200 down there. Oh, both 200s are down there. Um, let's do this for fun real quick. Let me just put a box here. What if we go down here and hit this 200? Like, where is that um if I'm on the week, where is that place? Bottom band. So like my system, like everything works together. All this stuff overlaps. It really does. I know some of y'all love the 200s. If you're eyeballing as a right short term during this bearish season, knowing August, September, October, when every year we get the negative, I mean the bearish volatility during this season. If we go lower, all we're gonna do is go down to the 20. If we can get through the 20, all we're gonna do is go down and test the 200, which is where the bottom band, and we'll still be bullish. We still, to me, if we hit that bottom band, we're still not bearish. We're just it's like the other team has the ball, but we've been winning for so long, we still could get it back pretty quickly. All right. I'm trying to give y'all like the most practical metaphors to make this stuff sink in. Um, okay. Walmart. Taiwan semiconductor. Bullish, 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 bullish. 415 when the VIX spiked. If you just had an alert on your chart to say, yo, the VIX is up to 20, where that 200 I showed you is, you would have expected it to come down. You would have expected this. You could have forecast that we're going to come down and test the 20. It does it literally like clockwork. If you go back and like look at enough, oh my goodness. And when I say looked at enough, I mean like if anything I'm saying is resonating, here's what you'll do if this is resonating. You'll take one concept, maybe it's the VIX, and you'll pull up two charts this weekend. You'll have the VIX on the left, you'll have the S&P on the right. Week chart. You ain't got to go to the day, it's too complex. Go to the week. And just look at the VIX. And every time it spiked above, I told y'all 16 is like 1% volatility. So let's do like 1.5% volatility. What number is that? 16, right? Plus 8. And really, I mean, because that 200, just say 20. Let me keep it simple. Just say 20. Let's put a line on there. And then go back and look at every time the VIX hit 20 or above, and then look at what happened. Correspondingly, what happened to the S&P. And then what happened when the VIX dropped back down to 16? Market just went right back up. Slow, easy money. Just higher every week. Right? Do that for yourself after watching this. All right, study a little bit. Okay. So Taiwan semiconductor. All right, well, you can already see it now. I don't even have to say it. 7:15, we crept back inside. We tested the 20. We closed under. Of course, the gap down. Right. So we're pushing back up. Which again, we're not bearish on a lot of things yet. I said this is bear season, meaning sometime in these 3 months, every year, somewhere in these what is this? 12 weeks between August, the first week of August, and the end of October. Somewhere in those 12 weeks, you will see some drops, right? So we're pushing back up right now. But look at the volatility. Lower, 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 lower. If the volatility on this specific chart continues to go lower, it's not even a guess that we're gonna break those lows of 130. It's highly probable. If we don't have volatility, we're not going higher. We're just not. So where are we probably gonna go up to right now? Expect this to go up and test the 20. 156. Matter of fact, let's see where that is on the day chart. Okay, so it got real close to its 200. And then look at where 156 is. 156 is going right back up to test that bottom band. And like, think about this for a second. Jeez. We went lower than the bottom band. We pulled back up to test it. We went lower than the bottom band. We went right back up in that same area to test it. Couldn't get to the 20. Went right back down. So what we're probably gonna do is go back up somewhere in here. But if the volatility, if we can't get back up here, all right, we can't get back. Let me put a little circle. We can't get back up here. We'll be back down here. Right. Just a little math, little stats. If you can't, you know, I don't know, you can study your butt off. Some subjects are just hard. If I had to take a physics class, I'm probably never gonna get an A. All right, so if every quiz I've been getting like C's and D's, and I've been studying my butt off, and I at least can get a C, I just may never be able to get an A or B in terms of pricing. So guess what? I'm probably gonna end up getting D's and C's again because that's my trend direction. Um, Good old Boeing. Let me zoom out a little bit. Oh, this Boeing is everywhere. I see stocks like this. Y'all see how quick I looked at Boeing and was like, ugh. Right? When I don't just see clear, strong uptrends that are sustained or downtrends sustained, that just instantly tells me something. Like I already know if I look at the quarterly chart, like we just been stuck in some range, not going anywhere. There we go. So this bar right here, what was that? Um, that was the first quarter of 2020. This was COVID. We've never recovered since COVID. This is why, like, and then think about this. Where did we go? We pushed up to hit the 20, came right back down. Pushed up to hit the 20, coming right back down. Red dot, the volatility is getting so tight because nobody's really buying Boeing. Not enough to actually put us in a clear uptrend or even a clear downtrend. We've been stuck for 4 years, just bouncing up to this, bouncing up to the 20 on the quarterly. That's it. Tried to make a move up. We tried to get there. We tried to get there, but no. Not enough volatility, not enough gas, not enough good news, not enough fundamentals, not enough happening with the actual company. All right. You can connect the fundamentals to this stuff. Yeah, you can. All right. You can. That's Boeing. Unfortunately, I think Annette asked me about Boeing. Annette, you know me. You know me. You taking my classes. I don't trade stuff like this. Stuff that's like still like, and think about it just for 2 seconds. There's so many companies that have made so much money since COVID. Why would you trade? Why would I trade Boeing? I wouldn't. It doesn't seem to have the history that I like. This is like dating somebody who tells you, like, "Oh, yeah, I cheated on my last 4 girlfriends, 4 boyfriends." I'm telling you. These same decisions here are the same decisions we make in everything else in life. It's positive and negative. That's what I love about the market. This is a metaphor for life. This is not the person you want to marry. All right. They've been stuck trying to figure out, uh, they've been stuck. That's Boeing. Um, oh, SoFi is a little so they haven't they IPO, what was this? First quarter was 2020. Was this third quarter? So I'll go to a week. We'll get more information. But think about it. Like even on that quarterly, you can already see it. You can already see it. We're inside of that month, that quarter right there. We've gone nowhere. Right. So I know you know some right. If we're talking investing, you're like, well, I haven't really lost any money. True. And don't get me wrong, because these numbers are actually bigger than what they look. So if you bought like down here at 5, we got up to 10. That's 100% return, right? So there is movement here. You got to look at the numbers and get more detail, right? You see how I saw that? But the first thing I actually paid attention to was we're in a range. Ranges scream to me, no volatility, no trend. And I gotta wait. I don't want to wait. I really don't. And I'm super patient. So when I say I don't want to wait, I'm not saying that like I'm not patient in my trades. I don't want to try to force something that's not even moving to make me money. The probability isn't there. Right. So I know, I hear about SoFi. I hear people talking about everybody. I get it. Okay. All right. Right now, all I can tell you is we have red dots on the squeeze, the Bollinger Bands, that standard deviation, like the volatility is so compressed that it's tight, which means you're probably not going to see an actual trend until something needs to happen with this company. We need a catalyst to actually get a trend to really just start making like real money. Now, don't get me wrong. I know again, if we go to $6 to 8, I get it. All right, that's a nice percentage. So like I know down here at these really like smaller numbers, like this isn't like Apple at 222, right? To whatever it closed at today. Right. So yeah, there's movement in here. There's percentages. Yes, I get it. There is. But I'm really just sharing instantly how I look at stuff. And I try to always trade the thing that is going to give me the easiest, no, I'm saying simplest time because I can look at it and instantly see on the quarterly, any time frame, there's just good volatility. It moves, right? Those are the go-to stocks for me. I probably wouldn't trade like 90% of the stuff I hear people trading. That's me. That's me. I'm selective. All right. Okay. Robinhood. Um, Check this out. Nice periods of uptrend, right? So you see that 1, 2, 3, 4, 5, 6, 7, 8 weeks, 8 weeks bullish activity. Pull back inside, never dropped. Got back above the one, new highs. All right. Crept back inside. Ooh, big ugly drop straight to the bottom band, and then we gap down. Losing volatility, going lower again. Everything right now is in that place where it's like if the S&P, let me kind of go back to the S&P real quick. Like for you to, well, how should I say this? Let me think how to say this. I'm looking at the week chart. I don't have any red bars on the squeeze. We're not bearish. We're at the bottom band. We're on the other side of the 20. Ugh, that's ugly. The other team has the ball. But if I'm just solely paying attention to the week and I want to buy contracts thinking 4, 8, 12, 1, 2, 3 months out. That's how I trade. That's what I trade. Which means, right, so there's a question there. How do you trade? What time frame works for you? Working professionals, if you can't look at the market every day, Why are you trading off the day chart? It don't make sense. And then you think, oh, but a week is too long. No, it's not. You can make some amazing money on the week. You're just gonna have less trades. But I almost guarantee if you had my system, you're gonna win a lot more than the person who's like in and out, every like you doing all this swing trade and taking all these trades. I'd rather take less trades and just put more money on the table and make more money and have less worry and anxiety. And with these longer time frames, the data, there's more information in the candle. So it's like you got options. You got options. I went back to the S&P. Oh, let me end here. I'll end here. Y'all have been let me take everything off my chart too. It's been super fun doing this. I hope you guys will come back. Tell a few friends. This one, like I had to teach a lot. I'm trying to figure out how to not have to teach so much and like really just dive into what you want to talk about and kind of give you some entries, like show you if there's an entry that makes sense. Um, but how I view the market really is super unique. So I don't know. I kind of have to do a little bit of teaching every time I do this, which is cool. So August, September, October was here, right? That was 2020, right back into the uptrend. Right. If I find the next was eight was 8 9 10 yeah 8 9 10 so 20 was it 20 21 September was the ugly month, right? That pulled us down. Back here it was September, October tried closed bearish, and then we finally were able to push up in November. All right, so that's why I said this is bear season. All right, and then here this was August, pushed up and then came all the way down. All right, so that was a tough. That was and the here this was like 2022, and so this drop was like 20%, but GDP was kind of fading. Right, we really were in a recession. They just didn't want to call it that. We were in a recession back here. 20% drop. 2 quarters of GDP negative. I don't know why they start trying to change these definitions on us. I'm like, y'all lying. We in a recession. And then we got out of it, right? New highs. Clearly, we're making new highs. We're not in a recession. And then let me find what is it? 8, 9, 10? 8, 9, 10 again. So then the next bear season is right here. Like clockwork. What was the drop? About 11%. So this one was 11%. This one was 20, but the market was actually in a downtrend in a recession that they wouldn't call a recession. 2021 market was hitting new highs, froze up for a second, dropped about 7%. And then I think here in 2020, that was 11% too. So 11, 7, 20, 11% drop. Right now, so far, just this month from the high, we're down. We went as low as 8%. So maybe, maybe, maybe we go lower. Looks like we. I'll say this. It's early. And matter of fact, and what I just showed y'all those 3 months, those bear seasons, I just gave you like a couple years. I just gave you what? 24, 23, 22, 21. Go back the last 20 years, right? You want to take something from these sessions, don't just let me do the work for you and give you 4 years. Go back and look at the last 20, 25 years. It ain't gonna take you but 20 minutes. Then you have what? Now you have a bigger, better picture of these bear seasons. You might be able to come back and tell me, Noble, I went back to 1980, 44 years. The average, like you can connect the VIX to it. You could just there's an endless amount of analysis that you can do that's just very simple but logical. What's the average bear season drop over the last, I don't know, 30 years? I don't know. I can find out though, real quick. Right. So you gotta be curious to be a really great trader. You gotta question things. You gotta challenge the status quo. You gotta know what your indicators are, like how they work, and then why they don't work as well. All right. So I know some folks dropped off, but um, 2 hours and 24 minutes, man. So I appreciate you guys a lot for rocking out with me. Um, I'll end here. I'll be doing these lives all this month, Monday and Thursday. They'll get better. It'll be a lot smoother. Monday and Thursday, because I wanted to increase my activity for a couple reasons. I will be like making this an official thing that I do every week and get like really consistent. I just have not committed to it yet. All right, so I'm being very like transparent. Like I don't want a job. I want to help you guys, but I've tried to do that by having really amazing classes that I know are teaching you more sound fundamentals and statistical principles that literally nobody in the country is teaching. Nobody. Right. So um September. Stay tuned. I'll say the easiest way to connect with me, one, subscribe to the channel. I can finally say that now. I've heard a million people say that. Subscribe to the channel. All right. You'll always know when I'm live. You get the little notification. Go to my website, limitlessclass.com. Limitless class. That's what I used to call the brand, Limitless, because markets have limitless potential, right? Last few years, I tried to go back to like really put my name on what I do because nobody has this specific recipe that I have. Took a lot of pain to get here too, right? So I don't say that like being all braggadocious. No, it took a lot of pain to get here. Um, limitlessclass.com. Throw your name in so I have it on my database. I don't send out a lot of emails, but when I'm doing stuff of value, you'll start to get a lot more next year because I'm planning a lot of things that I just wanted to like slowly pilot before I launch. Um, but if you're here and you're like, man, I need this type of teaching, and I really want to commit to this, like, oh no, well, I've been losing, I've been struggling, like just the one. We're above the one, we're bullish. If we're below, like that's where all the trends fundamentally will happen. Right? That takes 2 seconds to see. Takes 2 seconds to see on the time frame that you're on, right? So um uh I got a class starting in September. And I'll pause for a second because I'm like, dang, I was going to teach, do my 4 week intensive options class. What I realized is this, y'all. I was doing all these like 8, 12 week classes, and I realized like your husband's gonna get sick, your kids are gonna blah, like there's something's gonna come up. So I decided to test something that's been working amazingly well. I can literally change your life in 1 month. My classes are intensive. They're like a hardcore boot camp. You spend time with me basically 3 days a week, Tuesday, Thursday, Saturdays, live real class. Saturday is like the office hours when we can chop it up and talk about whatever you want to talk about. The other days you're getting homework, you're still getting digital content. It's almost like you're in class every single day for a month. But if you can commit to this for a month, yes, it's premium. My classes are over 5,000. Let me just say that. All right. If that scares you, I don't think you understand how this works. The ROI is crazy. I'm gonna be doing this for the rest of my life. And I want to help more people to do that. But again, when you know you're teaching something that's as innovative, as radically precise, as clear, I would say is what I'm teaching. Yeah, of course I'm going to charge what it's worth, and I feel like it's worth a lot more. But anyway, I ain't even tell you a price because I don't want to even get into that. Keep watching the channel. I got a options class starting September. Um, join insider trading. You'll hear me like in a probably this Thursday. I'll say a little bit more about the classes, but futures will be October. Options will be September. And then Noble's just going to visit family and trade a little bit and relax and do what I do, right, for the next 2 months, November and December. So this for me is like the work season where I really try to help as many people as I can, who are ready to commit because there's a lot I can teach you here. But there's a value to the step by step process in any sort of course that is live with other people. And you're getting 90, 80, 90 hours of content. Right. I'll know your name. This is why I know some of the names here. Christopher Johns, um, Annette, right? These are people who've been in my class. I know them by name. Because I don't want a class with like 60, 100, 200 students. Like, I'm not, that's not my thing. I want y'all to get this so you can have it for life. Because whatever you want to make, you can make way more than you think is possible. Like, that's what I'm learning. The more I like, the more I've just committed and stuck to this, especially through those years where I was losing. It's just like there's great trades everywhere all the time. Like, there's never really a bad market. I just want to tell you, there's never really a bad market. The only bad markets are where we're getting no volatility. Squeeze is giving you a red dot. Just trade something else. Volatility's tight. Or watch that thing and wait for the breakout, wait for volatility. Then you catch that, right, as it continues to go back into whatever the major trend was before it got really tight and rangy. Because nothing ranges for forever. Right. So that's how you connect with me. Insider trading, limitlessclass.com. Subscribe here to get all the content. I'll be live Monday and Thursday every at 8 p.m. every week this month. And then I'm gonna shut these down, right, to get to my students to give them the time I need to give them. And then 2025, I'll probably be rolling this out where like every maybe Monday and Thursday. I'm kind of testing dates. I don't know. Monday's the beginning of the week. But I like to come back. Leaving y'all Monday to Monday or like Tuesday to Tuesday, that's a lot can happen. Right. So I kind of feel like I need to do these more than just once a week, but we'll see. Anyway, thanks for watching, man. I appreciate y'all. I love you guys. I mean that from the bottom of my heart. It's taking a lot to get here. Um, keep watching, come back, share this with somebody that you know and that you love. That's all I got. Thanks for watching. If you want to email me about something, it better be good though. Noble at limitlessclass.com. I only got 17 people, but dang, you know what? No, this is gonna be up here forever. That's cool. Somebody will see this video like a year from now. Man, maybe, you know. Anyway, let me go. My brain is starting to frazzle because I'm sleepy and tired and hungry. Thanks for watching. Join me Thursday. I'll be back. If I didn't get a chance to look at your stock, we will. And it'll be cool to kind of see what the market did from Monday to Thursday. Again, bear season, 12 weeks. Somewhere in that 12 weeks, usually we get you're gonna get a couple of bearish weeks in a row. Right. So let's have some fun. Let's keep learning and do what we need to do as traders. Thanks for joining me and come back to Insider Trading. Peace.